start the recording. So I'm gonna do like we did last time. I'm not gonna like show you how we did the whole process of like marking stuff up and then putting into Notion, because I showed you guys how to do that last week. But this week I'm just gonna go over structure. We're gonna go run through basically all of like EU, like I said, or AU if we have time, from like Monday up until today, and we'll kind of cover all the trades and the logic behind it. I'll try to catch them as much as I can, just like obviously like bar replay, but then we'll also do some like rewinds and stuff, and I'm going to include like the losses that I think are valid as well, because I think that's important to like keep those in there, right? So I'm going to try and take everything, and then obviously like this is an interactive thing, so if you guys want to, you're more than welcome to try and call where you think price is going to go. Obviously like this is recent price action, so you guys probably know if you're trading EU, right? But if you don't remember or you didn't trade this week, like, you know, give it a shot. For those of you that know, maybe like hold off from it or whatever. But you know, when we're doing like the lower time frame entry model, we'll explain kind of everything we're looking at. And if you want to mark out, like I said, if you don't remember or you don't know, you want to mark out a certain area where you think price is going to react off of, go for it. You know. So we'll do that, and same with like 15-minute, 4-hour zones. If you want, and you can even do that kind of interactively too, right? And we can start with that. So let's do daily first. Let me actually rewind. Are we on Monday though? Let's see. Would have been the 20th. I guess before we start, you guys have any questions? Or like I'm gonna follow some of the requests. Some of you guys DM me like asking for certain things. I'm gonna try to cover everything. It's mostly like lower time frame model and like picking POIs and stuff, right? So and structure. So it's all the standard stuff that we've been kind of covering like every other week, right? But yeah, if you guys have any particular questions before I start, obviously shoot them in chat, or you can unmute yourself, feel free to ask, and I will answer them too. But if not, let's get started. So we're going to start with daily. For structure, again, like I'm going to be pretty loose with this. It's obviously bearish. You guys can see that we are reacting to this zone here, right? And I'll just call it daily. Obviously we swept internal range liquidity there. This is holding. It's left equal highs above, so like this is probably going to get taken in the future, either to fuel a move to the upside to come mitigate one of these zones sitting above, or it'll just sweep it into one of these zones and then, you know, continue down, right? Or it'll blow up completely and just reverse its direction, right? So that's that. I'll quickly mark out my internal range liquidity, which is this triangle. Use this now, right? Kind of stole this from Brian. Really nice way of like looking at it without like just marking out liquidity like this. But yeah, the other thing I've been trying to do lately, because I think a lot of you guys maybe do the same thing as me, but I have this habit of like making my charts way too complicated and marking out things that like we're not even close to, right? Like stuff like this. So I've actually tried to like just simplify it down to what is the most important, right? Like what's the 20% of, you know, things, like I try to apply essentially like the Pareto principle to what are the 20% of things that I should mark out on the chart that are actually relevant to like what I'm trading for the day or for the week, right? Anything else, like forget it. Like you don't need it. You're just going to confuse yourself, right? Yeah, we can make it orange like a Dorito. We'll do that later. But I want to try and keep like the colors nice. I copied Brian for his colors, so thanks to him. We also have this daily wick, just the same one, but I feel like I've been marking this out for the past like half month, right? This obviously sweeps liquidity, so let's dig into the logic again around this a little bit, right? It's like a nice POI because it sweeps liquidity. I know it gets tapped into here, but like obviously it's not done, right? Now we're starting to produce a reaction off of it again. And then what we can kind of look at this as is, because we've like tapped deeper into it, we can see this as like a potential like chain starting to form, right? So I'm going to try to approach this like, obviously again, I know kind of what happens for the rest of the week, but I'm approaching this as if like this is Sunday night, like I don't know what happens, you know what I mean? So try to approach it kind of like holistically in that sense. So we got this daily, which again might potentially chain. You guys may or may not know what happens. I'll mark it on it anyways. And then what's the other like most relevant zone? Probably this daily zone here too, right? So again, I'm not gonna mark out structure for daily. We'll do it on 4-hour, but you guys can see overall like we're pretty bearish, right? We're breaking lows, right? Sweeping liquidity, mitigated this, pushing down, right? But we are also kind of ranging here too, and we've tapped into another daily zone. So price can do one thing or the other, right? Not limited to just going one way or the other. So I try not to be like too biased with daily, because obviously, like, especially when you're ranging, anything can happen. So I'd rather just leave my bias open on the daily, and like I start forming my bias more and more for like the 4 hour and 15 minute. That's really where I'm like looking to kind of build my like trade ideas on the mid to higher time frame. Right?
Rob,
Yeah, what's up, Miguel? How you doing?
just one question.
Sure.
Wouldn't you consider that we've made a judge now in daily here?
Yeah. I mean, it's worth pointing out. I don't necessarily mark it out because, again, like, we don't know if this is going to hold either, right?
Yeah.
But it is something we can mark out. I personally don't mark it out because I just don't want to make my charts messy. But, like, yeah, you're
Okay.
right. There is a change of character there, right? And we're tapping into this daily, right?
Okay.
So you have that. That's a good thing to kind of note. But I'd rather, like, look at the 4 hour now, right? So this is where we're going to start, like, digging into structure more so than we would have with daily. And then even the daily, I might even like hide these, but I'll leave them up for now. And I guess we'll do it this way. I'll start by marking out structure, and then I'll have you guys mark out the POIs when I'm done marking out structure, okay? So we can either use the trick, but in this case, like, rather than using our, like, move a few time frames up trick, I'm gonna just try to mark it out on the straight 4 hour for you guys and show you how I would mark it out without using that trick. So we'll start from back here again, like I always do, and we'll kind of like run through it, or I guess even here, it doesn't really matter. It's gonna be kind of unnecessary to mark out all that, but let me get the marker tool out, right? So we have our high, we'll call it 4 hour structure, right, with this gray tool here, right? If you guys want, you can even mark out structure too. Where do you guys think the next low is? Like, where did we break, and where is my next low and my next high? Because obviously this whole piece is like bearish, right? What do you guys think? What's my swing structure? See if you guys are correct or not. Okay, good. It's this, right? That's our swing structure. This isn't really relevant to me, whoever marked this out, because this is like substructure. I'm looking more at my swing points, right? Makes sense? So let's call this 4 hour structure really quick. Let me get my tools up here too, and clear everybody's drawings. Okay, so yeah, whoever like marked it out as this, like, that's correct. That's how I was pretty much looking at it too, right? So kind of have our low, high, right? Obviously this is like bullish until we break this, right? I'll kind of like step back a little bit too, because we have this low and we kind of came from this high, right? Hey, what's up, Michael?
Do you have a certain criteria for defining a swing point? For example, that this pullback over here, this one over here, like, you wouldn't consider this the whole leg?
No, I wouldn't consider that the whole leg, not in this case anyways, because it's like you have enough that it's kind of like pulling back. Like, I don't know how to really explain it, but if we, well, okay, you know what, let me go in the 16 hour for a second so I can show you why I would like consolidate that all as one leg. If we use this trick, right, of going the 16 hour, 8 hour, whatever, usually what I tell people is I want to see at least like a few candles, right, on this like relative higher time frame, right? So in this case, because it's just one candle, like, I'm not gonna necessarily consider this a pullback. I don't know if this is the one you were talking about. Let me go back on the 4 hour, but right, it would have been like this, right? But you're saying you want to consolidate this all as one leg. This is more like daily structure to me, what you marked out, not necessarily 4 hour.
Oh, okay.
So there's our daily zone here. Like, I'll show you on the daily why it makes sense, right? Let me clear this again really quick. Yeah, from a daily perspective, for sure it does, right? But this is our 4 hour, right? It's the same trick. I'm just like going up a few time frames and then considering it that. But for daily, like, we're pretty much looking at it as like this, right? That's our daily expectational order flow. We expect this to break, but again, tapping into like a pretty strong daily zone. It's obviously swept liquidity, right? So, and then again, if you guys know what happens, obviously we react to this daily, right? 4 hour within it. But going back to this, yeah, I would consolidate any like thing like this as one leg, but not this whole thing. Like, that's too much, right? So when it comes to picking swing points, I'm still loose about it, but I'm gonna look for like the major lows and highs, right? So you can see I'm literally picking like there's nothing around it. It's not like I'm picking this one. It's not like I'm picking like, you know, this high, right? Like this is not enough of a pullback on the 4 hour for me to consider it 4 hour swing structure, right? Like, yeah, you get a reaction off this, but look, it gets blown through, right? And then we continue down. So, right, we sweep this liquidity, right? So hopefully that answers your question. It is a skill that you're gonna have to like build up over time, but if you're struggling with it, just go to the 16 hour. It really simplifies it, right? Because then you're not gonna, basically on the 16 hour, if I use candlestick structure, essentially, like I can expect that I'm gonna be pretty accurate on my 4 hour swing structure. So that's the reason I mark it like that. And then I'll also quickly mark out, we'll do like the bracelet structure too, so that we're kind of like on the same page about that. I'll make it more clear for you guys. Where is it? Mid time frame. I'll call it 4 hour here. 4 hour boss. Okay, so I'll mark these out, and now I want you guys to continue to mark out structure here on the 4 hour. Let's keep practicing. What else do you guys see? What's next here? Where's my swing low that we just formed? Okay, that's what I was looking for, is this, right? So I'll mark it out. You can even ask Eli. Eli, what do you think structure makes sense?
I think.
No worries.
Whereabouts?
So I'm trying to tell them, like, okay, figure out where the bullish structure is now, like our 4 hour bullish swing structure. Are you gonna consider this whole leg? Do you like this low? Like, this is the one that I like personally, but if I clear everybody's drawing, you can kind of like look at it again.
Are we on the 4 hour right now? Okay.
We're on the 4 hour, yeah. So swing structure. So, and we can always zoom out to 16 hour.
Yeah, I'm with you on that.
This low, right?
Mm-hmm.
Because for me, at least for this, guys, like the reason I'm calling it this, and I'll cut back price so that it makes more sense, right? Obviously we see what happened here, right? But assuming that like we go from whatever the 25th from last week, right? The reason I'm picking that is because this is the lowest point that I would let price go, that I would still consider like bullish on the 4 hour. So price could retrace to this, and I would still like consider like my expectational 4 hour order flow to be bullish, right? Until we start like breaking, you know, like this high pretty much. Or really you could even use like some of these as pullbacks, right? So you can kind of tighten it too, right? But in this case, okay, we tap into this daily zone, right? What I would even do, and again, like it is kind of subjective, you could call this a pullback and call this your next low, right?
I was actually just gonna say,
Yeah.
I think that one
As our next
could
one,
be
right?
the good sign if it breaks that.
Yeah.
that next one that you marked before would be broken and continue bearish.
Yeah. Yeah,
Because
so
it mitigates that range there. It takes a little bit of liquidity and then pops up.
yeah, exactly. So it's the same logic. It's like, how far am I going to let price pull back and still consider it bullish? If price has to now pull back here after like coming and tapping into this and like making new structure highs, like, am I really going to still consider this bullish? No, not anymore. This is like nothing to me now. Now I would wait for like either, you know, 15-minute chalk or whatever to try and trade off of this otherwise counter trend 4 hour
Right.
POI. Right?
Either way, you're waiting for the confirmation, so
Yeah.
it almost
chalk, yeah.
not that it doesn't matter if you're right or wrong about your the trend structurally, but at the end of the day, you're waiting for that confirmation anyway to tell you if that's the fact. So when it gets into those zones, if you don't get the confirmation, then you know that that's not true, or your bias is wrong.
Yeah, pretty much. So I'm gonna mark this 4 hour chalk out too. You might as well. So obviously we can see the original like, or the initial shift in like bullish to bearish price action on the 4 hour here. So it's something else to sort of note, right? It's good to be like aware of all this stuff. So try to mark it out as much as you can while keeping it like relatively clean, right? Obviously we take the high, take the low, right? So it's definitely like obviously a short that you could have played off of this, right? But then pushing forward, right? Do you guys see how this is now shifting potentially bearish once we break this, right? So we'll just track price. So we have our low, higher high, higher low, higher high, but then fails to make another higher high. We change character, we break down, right? Obviously this high, which is also like the daily high that we respect here, right, is our next defined high, and then this is our current leg that we're playing within, right? So I want to see this low break because that's pretty much what I'm expecting for us to go like bearish, right? That's our like expectation if we're gonna shift, right? Otherwise, I want to see this high break, right? Before like this obviously broke down, we were expecting this, right? Just to continue the trend. But again, knowing that we're tapping into this daily, like we can expect either thing to happen, right? Obviously price can break down too. It doesn't have to continue up like bullish, in a bullish trend forever, right? So there you go, it breaks. So now here's the question, where's my next defined high that we just made from breaking this low? What do you guys think? It should be pretty obvious, but yeah, okay, good. You guys got it. I know sometimes people will mark, you know, stuff like this, right? And to be fair, like you could, I mean, price could retrace to this, but for me, like, if you're breaking this high, like, again, I'm going to think we're bullish, right? And we're just continuing off of this, right? Price is just making a thicker pullback, pretty much on the daily. So that's good. That's exactly what I would do. Like, you guys, I don't see anybody that marked it up here, so, like, good job. I think we can all agree, like, this is our next 4-hour swing high, right? And look.
That one does the most work too, right?
Yeah.
If you look at it, like it takes out liquidity and breaks structure, so there's a lot of weight behind that. Should be protected.
And not only that, but look at how impulsive this leg is too. Like there's intent behind that, right?
For sure.
And then look, obviously like reacts to, like this is a really fantastic 4-hour POI that we ended up creating, right? And then good, you guys marked out the next one, right? That's my next swing high. And this is actually kind of interesting because this is where, I don't know if it's here or if it's later down in the leg, but basically what happens is 4-hour and 15-minute swing pretty much align with each other. So I wouldn't say it's like rare, but it definitely is not like common that this happens. And I know people were asking me a lot of questions about this week. They're like, what is your 15-minute 4-hour swing structure? And for me, I was like, hey, you know what, like I'm gonna start counting these because like that's a nice pullback on the 4-hour, you know what I mean? So call that our next swing low, and this our swing high, right? As we can see, there's a lot of intent behind it too, right? If we have to fight against all of this like super bullish price action to come back up to tap into this, like to me, again, we're gonna be pretty much counter trend, right? Except for the fact that like obviously you can interpret this as liquidity, right, and kind of see it as this, but the fact that we're breaking like a major swing low here, right, and then even same with this one, right? We're like taking out multiple lows. It's not just this one, but also this one to the left. Like I'm gonna call this my swing high. This one I would say is a little more subjective. I mean, Eli, what do you think? You could in theory call this your swing high too, but for me, I'd rather just say this, right?
Yeah,
just
and also it flips there too, right? It reacts off of that demand to the left, failing and then continuing lower to break. So that's a higher time frame flip right there. So that's definitely
really nice,
something you want to pay attention to, and then just wait for that confirmation on the lower time frame. And also too, that right above there, that's pretty weak looking high to me, right? Like on a lower time frame, that would be like a series of mitigations.
Yeah.
So
wait, which one are you talking about? This
right
one here?
there, yeah. Lower time frame, that would definitely be a series of mitigations. So to me personally, I would consider that as liquidity for the future.
Right. Okay, so let's keep pushing price down. See, it pulls back. Like that is a clean pullback for me. So now, again, same thing. Like, what do you guys think? If we take this low out, right? What's going to be my next high? I mean, it's obvious. There's one option, right? It's this, right? I don't think it gets any clearer than that. This is actually pretty clean when you think about it, right? So my low, that's my high, and this is my current like trading range that we're playing with, right? So until we break the high or break the low, right? Or sorry, break the low like that, still bearish, right? And our expectation obviously is we're going to break this low, right? Now, one thing to note is, again, look, we're in this daily zone now, right? Which is also chaining off of this daily zone all the way to the left too, right? Remember the same one that we marked out earlier? So, oh, and we also have inducement, right? We have all this liquidity that we swept, right? And we're tapping into a nested 4-hour zone. See here? Or range, whatever you want to call it. So we'll mark that out too. So this tells me that, yeah, while our expectational order flow is bearish, like we can also expect that this is potentially going to hold, or the extreme, right? I've been marking out this extreme all week because we don't know if this is just going to get used as inducement itself, right? And by inducement, I mean see this low Yeah, this low and this low, right? Does somebody have a question?
Yeah, we can expect the price come to get sweep of liquidity here, or
We can, yeah, of course. Whether it's now or later, like there is definitely liquidity, right? Remember, there's stop losses sitting under here, especially because it's equal lows, right?
yeah.
And I'm sure if we look to the left, within this daily zone, there is probably something here that we can investigate. And
If we refine the dailies, maybe it's
right. I don't know if this got tapped into already, but
yeah.
this is how I would mark out the 4 hour like zone all the way to the left. And again, this is nice. Look, it sweeps structure.
Yeah, me too.
Right? So it's pretty nice zone. I don't know if we tapped in. Yeah, we haven't tapped into it yet, right? So again, like this is another thing we can mark up, right? We have literally a 4 hour wick zone, right? Which on the 15 minutes is going to be a clearer like candle, essentially, sitting below these equals, right? But for me, like we're pretty far away from it. It's not to say that like even within the next like day, right? Obviously, because today's session's pretty much over, right? That we won't tap into this, but I mean, we did push up quite a lot today, and I don't know if we're gonna like keep pushing down, right? But anyways, yeah, it's a valid thing. You can definitely mark this out, though it's not that it's not on my radar. It's just not like super important for me right now. This is more my focus, right? Especially like if like consider that we're back at like Sunday or Monday, right? This is September the 20th, Monday. I'm not necessarily going to be looking at this. I'll be aware of it, but like I'm more focused on my structure here in these POIs, right? And until these POIs fail, right, whether we try to enter them or not, or we find our trade setup, I'm not really going to be paying attention to this. Like I don't want to cloud my judgment too much with having too many like conflicting things, right? Because otherwise it's going to make me either hesitate to enter on these POIs, which I think are valid, right? You could have taken a long on this, right? Or yeah, I mean it could just mess you up, right? So I try not to like, for me personally, I don't like having like too many ideas conflicting in my head. I try to like keep it simple and focus on like what my intraday perspective is, while having like this loosely in the back of my mind, right? You can be aware of it, but don't like give too much weight to it either, right? Because again, price doesn't have to sweep this now, and it still hasn't swept it. It's already Thursday. We might sweep it tomorrow, might not, right? But yeah, clear all my drawings again.
So here you will wait for maybe a chop or on this point.
From this point, well, let's keep looking at 4 hour structure too, right? Like, so I think we've done a good job of it. Let's see if it breaks this high, right? It does. It wicks it. You guys can see here, and then it breaks down, right? This obviously ends up failing, but there is a trade here, so we'll investigate that, right? It's a nice 4 hour zone with a 15 minute in between it, I believe, like a refined zone nested inside. So we'll take a look at that. I think I skipped ahead a little bit too much, so let me like actually rewind it back to the 20th. So we'll start with London, Frankfurt, right? So again, approaching this, we can see we have this as one of our POIs, right? Taps in. Expectational order flow is bearish, obviously. So what I would look for here is pretty much like a 15-minute change of character. And even if we don't, I mean, it's not the worst zone, right? Because this, I wouldn't really call this a flip. It's a little weird because we have like this thing in between, right? If this weren't here and like this reacted off of this, I would call it a flip, sure. But obviously we know that it reacts to it, so let's investigate it, right? So again, I'll pull back into it, and before we do that, let's quickly mark out our 15-minute swing structure, which honestly is the same thing. I'll quickly show you guys. And I can turn off the background stuff you guys want, but I just have my sessions there in case you guys need it, right? And it helps me like kind of map out where we are in the day too, right? So we have Asia here, London, right? And then New York would be like this dark blue section here that you keep seeing. So it's kind of like a repeating pattern, right? But yeah, if you guys want me to shut it off, I can do that too. But anyways, 15-minute swing structure. This is a funny thing. It's exactly the same. I'm going to explain why, right? We'll start from the top here. I mean, it's only exactly the same up until this point, but I would say like for swing structure, we'll just call it this. This might not be the most accurate thing, but for the sake of like speeding things along so we can kind of cover more price action, I would say this and this was my high, this broke this low, defined this high, right? Define this low, we pulled back up, define this high, broke this structural point, so we can then call this 4 hour slash 15 minute break of structure, right? Swing structure. And then this is where I feel like a lot of people got tripped up, is this is not a pullback to me, because we never took any highs here. This is just essentially a supply chain, right? Look, supply keeps getting respected and holding and then blowing through, right? So unless I saw something like this and we break the low, then I would consider this my swing high. But otherwise, like, I'm not, right? Even up until this point, like, I would still say no. Like, that's not enough of a 15-minute pullback for me. Like, I want to see like this and a break, right? Because again, if I'm going to consider this chain, if I consider this because I see you're the one marking it up, if I consider this my swing high and low, like, would you not look for shorts here or here? Like, it reacts off of this, right? Even in hindsight. So like, these are not like counter trend to me. These are still with trend if price retraces back up to these and then continues down. Does that make sense? And that's essentially what we would be playing when price comes and taps into this, right?
Yeah, it didn't like complete.
It's not
Yeah,
enough.
but more inducement, wasn't it? Liquidity.
Yeah, exactly. Like, this is more liquidity than structure,
Yeah.
right? So, yeah, as long as you guys understand that. I know it's like, again, it's a good example of price action because it's maybe not like, maybe some of you didn't understand it. I can see how it's like challenging, obviously, right? It's never going to be perfect, right? You don't have to be perfect with your structure and stuff, but try to be accurate with it. Try to understand like the logic behind it, right? Give me 1 second. I'm just gonna close the door here. All right, so moving on. So we marked out our 15-minute swing structure. Till we break this high or break this low, I would say that this is maybe enough of a pullback now, right? But same thing, right? I still want to see it kind of do something like this. Where do you guys see 15-minute POIs that you would either short or long off of? Go ahead and like pick them out. I'll actually rewind price a little bit here too, so because there is one here too. Sorry, I will shift it over so I line up with you guys. Okay, good. So I know a lot of you guys are obviously marking out because you remember it. Obviously, this 15-minute zone, I'm pretty sure gets tapped. I have like terrible memory, so I don't remember actually. I think it does. Yeah, you have this one.
I think it actually takes it out. I can't remember.
Yeah, I'm pretty sure it takes out this one. I actually took a loss on this one, but it was still, I think, a valid trade. Yeah. And yeah, even this is valid to me up here, right? But again, price is gonna have to retrace pretty far in order to come mitigate this, right? But I'll mark it out anyways, or maybe not. You know, we'll leave it unmarked because honestly, like, unless price breaks through these, there's no point in marking it. That's usually how I'm approaching everything. And yeah, even these wicks are good too. But same thing. Until we violate these, again, no point. I think there's one that you guys did miss, and it would be this one here too. I don't know if anybody marked this one out. If you did, good job. If not, this is an important POI too. Why? Because we have a ton of liquidity sitting here, right? And what else? This also sweeps liquidity. If I zoom into this, I'll show you guys what I mean. Look, we sweep this liquidity here too, right? So that's pretty like nice, and it's a subtle thing, but the fact that we swept liquidity even on a lower time frame tells me this is a good quality POI here. So it's a nice 15-minute. I know it's kind of been tapped into, but we still consider it like valid enough because, again, consider this liquidity, and same with this like trendline liquidity here, right? This is obviously a supply chain, but like it doesn't mean it has to hold either, right? Last POI, which I think somebody tried to mark out here. I don't know whose brown line this is, but yeah, exactly, would be pretty much like this zone here, right? So that's another 15-minute POI that I'm interested in. Now, I know again it's counter trend, but we're in a higher time frame zone. Remember, we're chaining off of daily demand, so like the whole idea off of this for me is obviously we can, and we also got to change the character, exactly. I'm glad you guys are marking that out. Yeah, the whole idea here is, you know, potentially we can look for a long intraday to play up to these areas for shorts. Does that make sense? So, I'm gonna clear up these charts. Yeah, what's up, Michael?
Yeah, a quick question.
Sure.
You had previously marked this this right here as your 15-minute swing structure from here, right?
Mm-hmm.
So, well, we already know what price ended up doing. It started like creating like a pullback up here, right? But when this started happening, did you consider these new highs that were forming as new structure, 15-minute structure? Because you previously had said that this was the whole 15-minute structure that was here.
Well, for me, here's the thing, like you can look at it that way, obviously, but again, I didn't see enough of a pullback to consider any like lower high here, right? So if anything,
Okay.
what you would be seeing is just like basically it would be what is defined as like substructure, right? If we're
Okay.
like looking at like what we talk about in the refined course, anything that you see on the 15-minute going like this, yeah, it would be substructure, and that's fine. You can play these too, right? Just know that keep this in mind, right? This is what I'm trying to have you guys focus on, right? And obviously we know like okay, like I know that it pulls back to pretty much the 50%, right? But the whole idea is like predicated off of this leg, right? And the fact that we're pulling back within it and then expecting this low to break, right?
Yeah, longs are definitely not wrong.
Yeah.
Here, for sure.
And you're super in discount too, right? If we look at like relative to like, you know, where we are in the range, right? If I just mark out like the current range that we're in, I'll mark it up here. And I don't even use like, maybe I do it more subconsciously, but like, and I know a lot of you guys use premium and discount, but like lately I haven't really been, but I definitely do like think of it, right? Again, maybe on a subconscious level. Look, we can look for longs here. Like you are so in discount of this current leg, it just makes sense to, right? And then obviously price pulls back to the 50%, reacts off of one of these. I can't remember. I think it was either this one or this one here, right? And then you're close enough to the equilibrium of the leg that like we can expect that, yeah, price is going to shoot down from there, right? So let's play through it. We're already half an hour into the call, so we have about 90 minutes left. Let's try to run through as much of EU as we can, and then yeah. So I'm gonna start with this. Let's see if we tap into any of these POIs, and then we can start looking for the lower time frame entry model, right? So this is a 15-minute POI that we're obviously in. I think within London, I can't remember if there were any trades in London. I don't think I marked them out necessarily. There might have been like a short here, but like this is more intraday that you guys could have played. I'll quickly mark it out. And I'll see if you guys can, I mean, you just had a quick peek at what it did, and obviously you see it sells off here, but let's see if you guys can tell me where you think you would enter and your logic behind it, because that's kind of the big thing I want to like practice with you guys, right? We obviously like have this liquidity. Again, this is an intraday short, right? So you're super in discount too. I want you guys to like be aware of that, right? So for me, like personally, I would look to take 5R off of this at most, right? And I think Aaron caught this trade. Maybe he caught like a similar trade on AU. I can't remember. Yeah, I would definitely mark out this. I know Sam usually likes to say, okay, mark out the whole buy to sell previously, so that would be this whole thing. But if we just want to refine it, whatever, like I'll do the engulfed one. That's fine, just to be aware of it. And then yeah, let's see what happens. So yeah, clear your drawings for a second. Let's wait till price gets into it, and let's start with marking out our change of character, right? And remember, because we were super in discount, let's aim for 5R on this one, right? So you guys tell me when you see a change of character, and I will mark it out. You guys see the initial break of the high? And the break of the low there? Yeah, okay, good. Good. Everybody sees it. It's perfect. So I'll use this black line to denote it. Clear your drawings if you guys don't mind, or I'll clear them. So definitely have this, right? Now there wasn't a lot of intent behind this, so we could wait for this to actually close below it. But you guys see, I think we actually already potentially missed it here. You actually built some liquidity. So let me rewind for a second, and let's actually see. And you guys tell me whether you want to enter off of this or you want to wait or what, how you would approach it, right? For me, let's see if it gives us 15 seconds. Okay, somebody's saying wait, right? I'm guessing it's because we don't have much intent here. That's fine. We don't have to be the first ones in either, right? But in theory, like if you were super aggressive, I mean, you could enter off of this, right? You have a little bit of liquidity that is kind of built here. Again, I'm just using the 15 second to sort of assess like the fight between buyers and sellers, right? We fail here, right? This obviously breaks as a minor, like very minor, like 15 second thing. Doesn't really matter. If we go back to the 1 minute, we can see like this whole zone failed, right? But really, I guess what I would be personally waiting for as well, I'd probably sit out of this until like we really break this with some sort of conviction, is this low to like actually break and be closed below, right? But there was liquidity technically like built here, and then look, it sweeps it, right? So in theory you could enter there, but let's wait a little bit. Okay, now we have a close below. Again, it's maybe not as much conviction as we would have wanted, but you guys can see we broke that low pretty nicely, and good. Somebody marked out basically this is what I'm looking at. So this area of demand basically failed, right? So I'll draw another line to kind of show us. Okay, that broke. Yeah, we have liquidity sitting here in the form of equals, right, sitting below this. So depending on your risk appetite, or if you don't feel like it's a good setup, you don't have to enter it. Obviously you can sit out. I mean, how many opportunities are there a week? It's like a stupid amount, right? Just on one pair. So we can wait, right? Okay, now we break with more conviction, so that's good. Now the thing is, I'll tell you guys honestly, like these equal highs here don't concern me all that much. Like, yeah, we do have this sitting above, but like this is starting to like disrespect demand like crazy. We're sweeping like liquidity pretty much internally and stuff, right? Now I don't see necessarily a like sweep of liquidity like here or anything, right? Like ideally I would have wanted to see kind of a wick like that, but it's not to say that we can't see this as liquidity and then use this as a potential entry. Does that make sense? We can kind of follow it. If momentum's here, and it's kind of weird because it's in London Mall, but if momentum's here, in theory, like one of these zones are going to hold, right? Whether it's the extreme or decisional. Again, we can't know for certain if one or the other is going to hold, but we'll mark out both, and you guys tell me where you would want to enter or if you want to wait. We'll just practice all of it, and let me mark this as liquidity too, because obviously like this failed. Okay, it looks like the majority of you want to do the top one, it looks like, right? And you want to see this as liquidity. Okay, good. I pretty much agree with that. I'd rather miss it than like take the L, to be honest, but I'm good with taking L's too if we're in like a high momentum market, right? So I'll put an order here. Again, I don't really remember what happens, but which is I guess good for me and my back testing. I have like bad memory, but see, this is liquidity, and again, this could hold or get used as liquidity too. So if we miss it, whatever, it's fine. If it does hold, I'll put on an order for those of you that like called that. But look, now we're starting to sort of build liquidity here. And look, we covered the high, right? That's pretty important. Kind of like EU shorts today. I got swept out myself. There you go, we get tapped in. And then price dumps. So look at that, that's perfect. So whoever voted this, like, I don't know if you were cheating, but like, good job. I know like a lot of you like either took this trade or you remember, right? The price action, but really fantastic stuff. And honestly, even if you...
Rob.
Hey, what's up, Michael?
I've actually seen this situation several times where there's liquidity sitting underneath both of the supply zones in this case. So is there like a way to know which one of them will hold, because there's like inducement underneath each of them, so they're like,
yeah,
we got liquidity under the extreme and liquidity under the decisional one. So
yeah, again, like I said, if you're looking for certainty in like the market, you're not gonna find it. Probabilistically though, like either could have worked, right? And this is why I was just gonna say, like, anybody who tried to enter this, like, you're not wrong either, right? And just because this worked doesn't mean you're right? It's just the probabilities playing out. So like, try and like keep that psychological / mindset like piece running in your head, because that's the best way to approach it from a psychological perspective anyways. But yeah, I mean, listen, like the way that I do it, honestly, it's part of it is like feel like, which do you think is more like clear in terms of liquidity? Where did the struggle happen, right? Obviously we have this, right? You could even like view it as this, right? Like price kind of fighting with this area of demand here, right? And then kind of flipping off of that, right? But
Can you...
Yeah, sorry, go ahead.
No problem. Say.
Oh, I was gonna say, so like, again, either are correct, because here's the thing: if this were like London Open, I'd be happy to take this. Even just now, there was a trade that I just took that was a decision. It ran for 5R. I know Dana is in here too. She took the same trade. We took the exact same trade. Like, good job, Dana, because this is a really nice one. And it was a decisional candle, right? Decisional trade. I'll quickly show you guys really quick. And it's kind of funny because I got swept out of the long here too. Now, it didn't run for long. And look, there were a ton of decisional ones after as well, right? But this is the trade that Dana and I took. Ran 5R, right? Why did we take it versus like taking this one? Well, because like the further away that you are, obviously from the origin, the higher the chance you're gonna get swept, right? That you're gonna get used as liquidity. So again, like approaching it from a probabilistic mindset, we can expect that this is definitely lower probability than this. And obviously, okay, like this is like end of day, right? So we kind of expected price to range and stuff. So I mean, it makes sense to only take 5R on that. But if instead, you know, we try to take, you know, like the extreme or whatever, in this case, like a decisional that's a little bit closer, right? This one's very subtle. Honestly, I wouldn't have even taken this. This is just more to show like we're chaining a little bit, right? Say, for example, let me pull price back just really quick in this current price action, right?
I will ask you if you can put the last entry on 5 minutes.
I mean, you could take it on the 5 minute too, but just to illustrate the example I'm trying to like give you guys, right? This overall is technically a lower probability trade, right? Than trying to like short off of this, right?
You say because the flip happens so far away.
Well, yeah, anything any entry you're trying to take that's further away from the origin has lower probability of working out, right? You're getting a worse price. Like ideally you want to like enter here short, right? Not down here, right? So assume that this is like New York Open, right? And price did this, right? Whatever it taps in. Again, it could just be building liquidity. Like how many times do you guys see this where you get a reaction, maybe it runs like 2, 3R, 4R, whatever, blows through it and then taps into something. You just get used as inducement, right? Like obviously this is a flip too. I'll show you guys what I mean, right? So I want you guys to imagine this is New York Open and I have an order. Say I take this, whatever, I take a BE on it. Maybe it runs 4R, right? But then say I also have a limit order either sitting on the extreme or kind of what's sitting above. Because we know it's like a high momentum type session, whatever. It's New York Open. Maybe it's 9 a.m. Eastern, right? Which is usually like high volume in the market, right? And we see this, right? Okay, we take BE on this, whatever, that's fine, right? Would you not set a limit here knowing that like this is obviously a better price and you know it aligns with all of our higher time frame stuff? We're bearish. This 15-minute zone is like amazing. I love this zone, right? Again, assuming I want you guys to suspend your like, you know, disbelief. We know what happens with this. It's obviously like at a different time, right? But if this were New York session, I would leave a limit order here or at the extreme, and I'd be happy to let price play around for a bit, build liquidity as much as it needs to, right? Is usually the like financial institution building up liquidity so they can actually like, you know, build up enough orders, right? And then I'd let myself get like entered there and I'd be happy with that, right? Taking these shorts like this deep down, they're just inherently riskier, okay? Like you're getting a worse price. There's no way like around it. Though again, if you feel comfortable taking and you feel like there's enough momentum and the BFIs are like, by BFI I mean like banks and financial institutions. If you feel like they're done building liquidity and you feel like it's a good HP setup that you can take and profit off of, then go for it. Because this happens too, right? It can just chain supply and then dump. Like it doesn't have to sweep this stuff either, right? So again, I know it's maybe not the answer you're looking for. Like if you're looking for some sort of certainty in the market, or maybe you do understand, you know, how to view it in a probabilistic way, but that's the way I view it, and you can't know like what's gonna happen. All you can do is expect that like either it is gonna get swept as liquidity or it's not. So it's a good question though. So thanks for asking it. But look, we get that exact same thing kind of happen here, right? Our POI here gets swept. So I like leaving these on actually because it shows me that like, okay, I could have entered there, but then where I would have entered also got used as liquidity, and there you go, right? And where would I target? Like, look, we can even just target this 15-minute zone here at the bottom, right? Which would be right here. So say we like, and maybe I'll like buffer my TP a little bit, we'll just say 7R, right? So I don't know, does that entry make sense to everybody? This one and like the other example I was kind of explaining, like why like we're looking at it that way.
I don't watch 1 minute yet. Only 5. That's
Only
why
5
I.
minute? Same thing, you apply the same thing to 5 minute.
Yeah.
100%.
That's why I was.
Like, I don't know if you guys have ever seen, I don't know where to find the diagrams, but I know like Blackwatch has a few examples of just like 5 minute on EU somewhere in the Discord. If you search for it, I'm sure you'll find it. Of I think EU and GU. They're just 5 minute charts, and literally it's this exact same thing, just kind of played out over like kind of the longer term, right? Obviously, because it's the 5 minute chart, it's more time passing by, and then the same thing. He's just looking for chains and sweeps of liquidity, right? It's very similar to like the legacy model we were pretty much playing. So there you go. We tap, we get our 7R. Even if you took this for 5R, like, I mean, you're doing good. This is a good trade, very good quality trade, right? Again, why would I take 5R? Because we're super in discount, right? If we look at it that way, like we know this like leg overall is probably exhausted, right? I know our expectational order flow is obviously bearish, but good chance this might get uses liquidity too, right? Just because we're so deep down. So that's how I look at that. Let's look at the next thing, the next entry. We have our next 15-minute zone that we're approaching here. This one's interesting because we just tap it by a tick, actually. So either like a lot of you would stay out. I stayed out of this one personally because it didn't come deep enough. I was expecting us to like break lower, but let's break it down because there's a valid trade here if you consider this valid, right? So take the low, take the high. You could even honestly consider this, but I'm gonna say this low and this high here, right? And then we can start looking in this leg for liquidity first. I always look for liquidity first, and then I look for like a potential area to enter. Now, what would deter you, and what deterred me, is obviously the fact that we didn't tap that deep into this. And so yeah, somebody's saying we mitigated that. We actually swept this, if you look at it. Just to show you real quick. You guys tell me, I mean, did any of you take this long here? Or see this just barely tapping in the 15 minute and think, okay, this is like valid? You can say in chat. Well, somebody was asking, how are you taking partials? For that, I would just usually either I wait for like the swing low on the 1 minute to get taken, go break even, or and then like, you know, take my full profit of whatever the next major 15-minute zone, depending on like what structure is, or I'll take you know, 20% at 4R like that, right? Then you're scrubbing some of the profitability of your trade off by doing that, right? You're holding literally like what 80% volume instead of 100%. So but yeah, let's see, what are you guys saying about
Hey Rob,
this?
I got a question for you.
Yeah.
If you have multiple point of interest, do you use like a different risk depending on like which point of view or point of interest like you're looking at? Like for an extreme, would you make that like a different risk compared to like another point of interest?
No, so what I'm going to suggest is rather than split, I mean, you could split it, but what I prefer to do is just 0.5% risk on everything. Because I know like the winners are going to cover the losses, right? There's no point in me like playing around with my risk and then like profiting less on what does work, right? You just take your L's, you know what I mean? I don't know, Eli, what do you think?
Gotcha.
Do you split risk?
I'm with you on that too. Exactly.
0.5 static, like
we said, like Rob said before, there's no certainty, right? So whether it's on the extreme or the decisional, we're never gonna know. So the best thing to do is, let's say you're always gonna take the extreme, always take the same amount of risk, and just let the probability play out.
yeah, exactly.
Because we've fallen into this trap too.
Yeah.
About like splitting our risk up, and what it led to is just we didn't really go anywhere, right?
Yeah, like I'll tell you guys what's happened to me in the past is I've played around with my risk in losing streaks, and I just make it 10 times harder for me to like recover from a drawdown, right? Imagine you take a bunch of L's at 0.5% and then you chop your risk down to 1 or like 0.1%, right? I'm not saying this is the example that you're talking about, but I'm giving you guys like a real world example that honestly all of us have done. Like I don't know, Eli, if you've done it. I've done it.
Yep.
But yeah, I hit a losing streak, in drawdown, whatever, or maybe I lost all the profit that I had, right, for the month or whatever, or week. And then we go 0.1%, trying to recover it, thinking like, okay, I'm on a losing streak. I want to try and like minimize my losses. And then I hit a bunch of like really high quality trades. This literally happened to me in August. You hit a bunch of high quality trades, whatever, 17R, 20R, and it's like, I'm only making like 1.2% instead of, you know, what I would have otherwise made like, you know, 12% off of,
Or
right?
recovered and
Would have
plus some.
recovered and gained. You're literally just sitting still in drawdown, right? So that's why we suggest just stick to static risk, like seriously.
So, just with regards to that, what's your win ratio look like? Eli as well, same question to you.
It honestly, it differs.
What was
mean-
the question? I didn't catch that.
What our win ratio is. It really
Yeah, so
depends. It really depends.
Specifically, like on the S&D stuff, I know you guys probably have different edges to you trade, right? So
Yeah.
I'm just curious to see if you've got any kind of clarity over a quarter or a month. I don't know if you track your data like that to see what your win ratio looks like.
We definitely.
I've never calculated mine, to be honest with you.
Happy days. You're doing all right then, Eli.
Yeah, like I'll tell you, mine fluctuates. Like sometimes mine goes from like, I'd say the lowest it's been is like 20%, and you can still be profitable with that if you're taking like good quality trades. You know what I mean? I've never been as high as like, you know, like Sam. I think Sam has done like 50% plus. I've never been that high, but I've definitely had periods where, you know, I've been like probably, again, I'd have to like look at it and calculate it to get you an exact number, but I'd say anywhere like from 35 to 40%, which is honestly like fantastic, right? But again, even with 20%,
I'm probably close to that too, to be honest.
yeah, even with a 20% strike rate, like I'm telling you right now, as long as you are hitting the good quality trades, you can eat losses all day. Like it's not a problem. I think same with Aaron. We were like talking about this, I think last week. You take a bunch of L's, it's fine. It gets covered by the winners, right? So.
I have one question about the price action.
Yeah, of course.
Sorry, bro. Sorry.
No worries.
On this situation, how we can choose a candle to
you can do either this or this. Like, what do you guys want to pick? You tell me how you would enter this. Or we could just skip this, because I saw a lot of people in here just saying like, you know what, this didn't actually tap into this 15-minute. It's not valid. I'm not going to start looking for anything yet. Maybe you're expecting this to get swept, right?
When I saw this, I actually considered this the chalk over here, and once I started seeing that, well, I was actually expecting price to go down here, but it never did.
Yeah.
But once I started seeing this, then I noticed, okay, this session is going to be bullish.
Yeah. Okay, let's do it that way. I can't remember what I marked out. Obviously it changes from like thing to thing. I may have marked it out that way too. This is obviously an aggressive chalk, the one that I had marked out, right? Anyways, I wanted to finish the kind of thought that I had about what's it called? Oh, let me just mark this out. About strike rates. So I wanted to mention, like, again, what's like an average strike rate that you can like expect is good? I would say anything above 30%. If you guys can pull 30%, maybe 35%, either in demo, sim, live, whatever it is, like that, if you can do that consistently, that is a good strike rate. This is assuming that you're hitting like at least 5R per trade too, right? And you can look at all the risk models and stuff that I put in the quest. Somebody asked like a question about it, right? Which is why I'm bringing it up, where within Discord, let me see if I can pull it up really quickly. If you go to the questions channel, there's a bunch of like diagram. Oh, you know what? I'll just show you guys here, because I actually have it here, the risk management stuff. I'm still working on this, but this is what I'm talking about when I'm basically saying, look, you can win with a 30% win rate over 100 trades, risking 0.5%, as long as your minimum winning trades are like plus 5R, right? And this is with a max 10% drawdown. Look, your total loss risk, or your risk of ruin, is 0.1%. Whereas if it's 2R, obviously we don't trade a system that has like such low R, right? Though there are people that do it, there's nothing wrong with their system, right? They would have to adjust the variables a bit and obviously win at a higher rate in order to make this a profitable system in the long term and not have this huge like risk of ruin, right? And then same with like, let me see this one. Yeah, like these are all like 30% win rate. So this is what I mean. You don't need like a super high win rate, as long as you're catching enough R to cover the losses. So just a small thing.
Nice.
Somebody's asking if I can share this. I'm gonna make a video on all this stuff, so eventually, when I get around to it, I will release that. But if you look in questions, some of the diagrams are there if you're just curious, right? And it's actually like backed by like a simulated set of data, so it's pretty good. Okay, so for this one, yeah, let's quickly look at it. So, okay, again, it seems like the majority of you guys wouldn't want to enter it the same that I did, right? I wasn't trying to chase it.
Maybe on 5 minutes I will enter, but 1 minute
Okay,
I
look at
don't
5
see.
minutes for you. Let's see.
Maybe.
I don't think it comes down to this 5 minute.
No. Ah, remember this. I didn't enter because of that. Yeah.
Yeah. So that's fine. You know what? Let's skip this one. I think we're all in agreement. Sometimes you're gonna miss trades, like big deal, right? You get your chalk and everything. Gets like liquidity is built. I know for me, like again, I would have waited for this, but then we started like pushing up really hard, so it's whatever, right? So let's go on to the next one. So now we are in. Okay, that was Monday, London, and then now we have late New York that we're in, right? So let's see. Okay, price taps into one of our 15-minute zones. So I think I actually took this and I took an L on it, so I'll show you guys why I took it. Now, obviously, maybe not the best quality zone. For me, why did I take it? Okay, look, it was Asia high. That's fine. But look, it swept liquidity for me. I was good with that. And then I saw it came, it tapped in. Obviously, it blew through it, right? I think what happened is, if I recall correctly, I'll try and show you guys where I took the L, which I still think is honestly technically a valid L. I don't know if any of you other guys took it, but or unless I'm thinking of like a different day. We saw price kind of do this. Oh yeah, okay, I remember now. So this was like a super aggressive trade on my part, maybe violating the plan a little bit, but I saw this as my chalk, right? And then for me, I just tried to enter off of this. So did anybody try to take this trade too? Because this is like, I would say this is valid, but again, it is like super aggressive. You could have waited honestly for like a more clear change of character, right? And again, we're in pretty deep in discount, right? So, and obviously, yeah, like this held pretty much as, and it didn't tap into it, but it held as demand, right? So we blew through. Basically, I think why this failed, although like, again, I'm calling it semi-valid, and I'm gonna include it in here just to show you guys like it doesn't matter that we take these L's. Obviously, like, you know, try to avoid taking things that are invalid, but keep smashing trades that are super valid. This is a super risky entry for like a not so good POI, so like it's not a huge surprise that this failed, but well, obviously this guy uses liquidity, right? The whole POI did, essentially. And then tapped into this higher one, right? Which, again, this one's swept liquidity too. It's sitting above all of this like trendline liquidity and liquidity in the form of equal highs that are kind of above like this Asia high, right? I don't know if you guys can see it, but you see these white lines? This is just my Asia range here. So there's midline, there's low, this is high, right? Might not be able to see it, but I took an L on that. I'm happy to share that because I want to show you guys like even, I mean, none of us are, nobody on the team is perfect at trading either. Like we take L's, like expect it, right? If you're going to be like afraid to take L's and stuff, you're not going to trade very well, right? I think we all understand that, right? But I have to like drive the point home. Same with this one, right? So now we're in another POI. We're obviously super bullish. I don't know if you guys would have traded this either, but let's see if we get our chalk. I think we sweep a bit higher than this, don't we? Can't remember. We build equals. Okay, still not breaking the low yet. Again, I'll let you guys try to figure out how you would enter this. Yeah, liquidity, exactly. So that might deter some people, but if we look all the way to the left, I think there's also the refined 1 minute zone that you can kind of look at too. So again, depends on how you want to look at it. Yeah, there is liquidity built. Maybe it'll sweep it, but even if price sweeps it a little bit, as again, you can kind of play it as like the trap, if that makes sense. It's a little bit more of an advanced way of doing it. I'm not suggesting if you're new, you try to like trade this way, but look, we tap into this refined zone. We build liquidity here. Okay, there we go. We had our fight between buyers and sellers. We swept, obviously, lower time frame liquidity here, right? I'll show you guys why, right? So you guys see this inside bar? That to me is liquidity that we swept, right? And then we can consider this whole 1 minute a zone to potentially play off of. And then obviously the risk here is that either we're gonna get swept as liquidity up here, or we have this extreme to play off of, right? So same thing. I'm gonna let you guys decide. How do you want to enter this, or do you want to stay out? What's the consensus here? You type in chat. Out. You mean stay out of it? Out. You guys want to stay out? Okay.
Yeah.
Okay, that's fine.
I prefer to wait for the
For this
the
chalk, yeah. This is
liquidity.
definitely a better
Yeah.
chalk. I completely agree with you. Yeah. Wait, and somebody is asking. Let's see, who asked it? They were saying, "What's my average gain per month?" Okay, what do we aim for? We always talk about this. We always aim for 10%, 20R, right? 0.5% risk. Even Albi does the same thing. Why? Because you can get funding with that. If you can make 10% a month, 20R a month, like you just scale up to whatever 400K, right? On FTMOs, like you're gonna make money, right? Do I need to explain to you guys what 10% a month is and 400K? It's a lot of money, right? Whether you live like, it doesn't matter where you live, you're making like a ton of money, right? Even if you make less than that, even if you make 5% a month after you're funded with 4 accounts, it's like it's 20 grand, right? And then you do like your profit split. We know FTMO's doing what, 90% profit split now. Like it's, look, the funding is there, right? Focus on the consistency, guys. Like that's what matters, right?
Yeah, if you're in it for just the money, you're gonna.
Yeah. And don't be like us, because listen, I'm guilty of it, of trying to make like whatever 60%. Like you don't need to do it. Some of the coaches in here can do it, and like that's amazing. And even some of you guys are probably, you know, making more percent than us per month, but are you doing it consistently is the question, right? And I'll tell you this too, like when you're managing like larger amounts of funds, like you're not necessarily like expected to make like these huge percentages, because there's so much capital behind it, right? So both you and the investor are gonna eat off of it, right? So I think this one, I'm gonna put this on here. I can't remember if this gets blown through, but let's just kind of see what happens. Right, even if we take like just the wick, right? I know you guys want to stay out of it, right? What do you think? Is this gonna get blown through, guys? Or is this gonna hold?
You have some, let's say, if a candle have maybe 10 pips, you will enter on 50% of the candle, or it depends.
If it's 10 pips, are you talking about for a 5 minute?
No, if a candle is too big, you, how to say it?
Yeah, like for me, usually what I do is I do prefer to just take the whole thing, but in the case of like this, if it's a wick, like I'll take wicks too. I take wicks a lot. That's something that I do. Usually like the wick is significant enough that it's like, if you were to mark it out like this, look, in this case it's literally the 50% of it, right? So it's the same thing. And then I give it buffer, because we don't know if spread's gonna like screw around, or if it's gonna sweep this even like subtly and maybe tap into this. So this just gives us a little bit of buffer, right? And then yeah, whatever, that's fine. If you guys want to stay out of this one, I'm gonna delete it just for the sake of it, right? We still made 5 hours.
Hey Roboto.
Right? What's that?
Hey Roboto.
Hey, what's
Yeah,
that?
when the entry which you showed right, it's a bit, risky, I think so. I know people are not disagreeing. Can't we take a confirmation on a seconds time frame? Anything around when you are very confused around that? Is there any way?
Yeah, so I'll tell you how I use the seconds time frame. Again, for me personally, like I don't like entering off of like 15-second candles. There's literally one thing I use it for, and it's assessing liquidity, right? So I'll show you like why, right? It's the same thing I showed you guys earlier, why I was like interested in this zone, right? Again, we don't know if this is gonna get used as liquidity or not, but to me, this is a flip, that's great. And look, we sweep liquidity. The flip is sweeping internal liquidity here. It's very subtle, but it is here, right? And it's the same as the long that I think Brad Spicer caught on EU. I think it was either yesterday or the day before. You wouldn't have seen it on the 1 minute unless you looked on the 15-second, right? That there's liquidity sitting there and getting swept, right? It was a pretty high momentum move. I think it was like New York Open or something, or maybe it was like London Mall. I can't remember. It was a ton of momentum, and it just reacted off of what looked like just a normal flip on the 1 minute, right?
So once it's entering the, for example, once it's entering the POI, small POI, 1 minute,
Yeah.
don't you just look at the seconds to see if it is breaking some it's again breaking some supply or some breaking some demand or something, and then you enter, or you straight away put a limit there?
No, I just use the 1 minute. Again, all I care about on the 15-second is whether we're sweeping liquidity. If I can't see it, if it appears to be wicks on the 1 minute, like it does on this, right? Like, I'll show you.
Yeah.
I'll show you what I mean. Do you see here what I'm talking about? Like, unless like you're trained to see this as liquidity, like even for me, I struggle to see it, which is why I use the 15-second for it, right?
Yeah.
You wouldn't see this as liquidity otherwise, but when you go down and dig into it, it actually is, right? Look, it's an inside bar. It's essentially like
No,
pause and price
I
action.
got that.
Yeah.
I got that, Robert. I'm asking when it returns back.
Oh, when it returns back. Oh, okay, I see what you're saying. Yeah, when it returns back, no, I do not use the 15-second. And I'll tell you why I don't. It's not to say you can't. And of course, I'm sure there's some of you in here that do it. And I think even some of the other coaches do it, which is fine. The reason I don't is because what's happened to me personally, right? I'm just going to give you an example, is I'll mark out stuff like this, and I'll try to enter it, and I just never get tagged because I'm just over refining it, right? So that's the reason I don't like it, and I'll show you. We'll mark this out as a seconds like zone. Let's see if it gets tapped into. Sometimes it does, obviously, and you can get a really tight entry, but it's like like it's opportunity cost too, right? Am I going to be that greedy about it and try to enter like that tight when I can otherwise just get tagged in and like pull like a 5-10R out of it? Like I'd rather just make something off of it rather than miss like a bunch and then make 20R off of like one of them and take a bunch of L's in the process. Like it just doesn't make sense, right? If you can get really good at doing this, like I don't want to deter you from it either, but look, let's see if this gets tapped, and I'll explain to you why I don't like doing that. If anything, and what I've told people in the past is I'll mark out, if you were gonna trade off of the 15-second, try to do at least like 3 to 4 candles, right? So either 45 to 60 seconds worth of price action, or the buy to sell range, right? Which is this buy to sell, right? So you can basically play ranges. But yeah, let's go on the 1 minute. Let's see if it actually taps into the refined 15-second. I can't remember if it does. Oh, it actually does in this case. So you'd be good, right?
I'm saying once
You're
it
saying
enters, once it start entering this position, okay, you saw that it's entering. Instead, there's 2 ways. Either we can put a limit here on the 1 minute, right? Or we can simply wait to see the reaction.
I get your question. So okay, I'll tell you exactly how I enter it. Either I'm leaving a limit, or I'm entering market when we're in the zone. I'm not really paying attention to the 15-second. I mean, you can look at it, right? But it's not like I'm sitting here trying to like figure out, am I going to re-enter after we've re-tapped into it? Like, no, not really.
Yeah.
Right?
You can't
Okay. You just see that there's a reaction and you enter.
Yeah, I mean, you could, but it's like it's just another step, right? For me, yeah, I don't bother doing that because I've already done the analysis and the work to figure out whether I'm going to enter the trade or not. Right? I found my lower time frame entry and everything, right? On the 1 minute, I checked this for liquidity. And then this, again, you could do it, like Eli said, but for me, it's just not a step that I have in my trading. If you feel like it gives you extra confirmation, sure. I feel like I've done this in the past, but it's just like...
you can do that after the decisional, for sure.
Yeah.
It's
you could.
It's a way to confirm it for you, but that's if you're up for trading on the seconds, right? It's totally up to you.
Yeah, I'll tell you the risk of it, and this is the same thing that, again, like, I'm speaking from experience here, right? The reason I stopped doing it is because sometimes I'll chase it and I'll get a worse price, right? I'll try to get entered here. You know what I mean? I know what you're trying to do. You're basically looking... I don't want to say you're necessarily looking for more certainty in the market. Maybe you understand that it is probabilistic, but, like, you don't need that much confirmation. All of the confirmation, and I hate the word confirmation because, again, there's no certainty in it, right? All of my analysis is being done back here, right? So that's fine. If anything, the only other way that I would enter this is as a supply chain, knowing that this is starting to chain into basically like bearish order flow, right? So I'd either mark out this, and if anything, I would wait, let this build more liquidity, maybe wait for this low to break or this low to break, right? Our chalk, and then try to re-enter that way. Does that make sense? And if it doesn't tag us, it doesn't tag us, right?
Yeah.
So, but that's a very good question, and I'm glad you brought it up because, yeah, technically I used to do that actually. So
it's really, I guess it is like how far do you want to go?
Yeah, how like
How
refined
far
do you want to be?
Because you're already refining from the 15 or the 4 hour down to the 1 minute.
1 minute. Yeah.
So yeah, you can keep on refining, but where do you stop?
Yeah. Are you gonna
So-
stop at the 5 seconds? Probably not, right?
You can,
Yeah.
but like me and Rob, we like to do 1 minute personally.
Yeah. I'll tell you guys the other, I guess the other like part to it is you're gonna probably get a little bit of decision fatigue, right? You can only make so many decisions in one day. Like, think of it as like a fuel tank, right? You're gonna deplete like your energy trying to like decide, okay, should I enter? Like you're asking, rather than asking yourself, am I gonna enter, just like 1 or 2 times? You're now adding like 2, 3, 4 more decisions to the mix, right? So unless you can handle that and you feel like, okay, it doesn't actually affect you that much, then great, do that.
Yeah,
For
definitely
me,
do it if you can do it.
for me, like, I mean, I would say do it if it actually benefits you,
Yeah.
right? Again, nothing wrong with it. For me personally, I just don't do that. But, and I think Sam, the way he does it, he actually does that though, right? Like he looks on the 5 second. But Sam is a really, really like experienced
He's a
trader.
genius.
He's really smart. So, hats off to him that he can do it. I wish I could do it, but
I have one
maybe
question.
day. Yeah, go ahead.
What would have been your target if we would have taken the trade?
This short? Okay, so let's look at that.
Yeah, the short, yeah.
So I'll put it back to where we had it. We'll do whatever, 2.5 pips, whatever it was, 2 pips. For me, to be honest, I'd probably, and I think this is how I had it up in my markup too, I would just look to take the most recent one because, again, by this point, I don't think we pulled back to the full 50% of this, right? So I still knew we were in discount, right? Look, we're still like sitting in discount, right, with our short. So for me, maybe this 15-minute zone, and if anything, I would look for potentially a long here, right? Again, why am I looking at this as a POI? Same reason that I always look at it. Broke structures, swept liquidity, right? This broke like these minor structure highs, right? So obviously it held here, right? Let's see how that management plays out because again, I don't remember. Oops. Go back to EU here. Okay, everybody close your eyes. I think this one would have gone break even, to be honest. I don't think it taps it, but that's okay. That's part of it, right?
Yeah, okay.
Yeah, it's great. Oh, yeah, okay. You know what? I forgot. This was really late in the day, too, that this just keeps, like, ranging, right? So if anything, like, for me, like, even right now, the same thing that I said, Dana, I know you're in here. You took that trade short, right? We both took it. Take 5 on it. We're so late in the session. It's like, are you going to expect that we're going to get volatility when, like, London sessions close? And we're late New York? And then spread hours is around the corner? No, right? So can we take 5 on this? Yeah, you can, right? Like, obviously, like, I would have held it, and then if I see it's just ranging like this, yeah, I'd probably just pull it. Or just set it break even and let myself take that break even. I mean, either way, we would have hit break even with the other management style, right? 20% at 4R, you would have been break even right away. So either you take it as break even or just close it as
thank you.
Yeah, no worries. It's a good question. You guys always have good questions, so always feel free to ask. Everybody learns from it, right?
Sorry, that's probably the most important, right? You need to know what your management is going to be. You gotta make sure you got that covered before you even enter, right? Because if you don't have a proper management style or proper area of profit that you're looking at, you're going to be in the trade not knowing what you're going to do. So that's probably the first step, actually, is figuring out where you're going to take profits before entering.
Yeah, I would say do that before you enter, 100%. Because if you don't have a clear idea, I mean, you should know, right? You did all of the structure and like mid time frame, higher time frame analysis. You should have an idea of where you want to take profit. But for me, a lot of mine is session and like timing based because I like closing stuff before end of day. I don't like swinging really. It's just not like a strength of mine. Some of the other coaches can do it. Eli, I think you're the same way. We do mostly intraday.
Yeah.
Same with Aaron, more of an intraday trader. At most, I've seen this guy hold like 2 days. You know what I mean?
I have one question.
What's up?
So we didn't reach this supply zone, so it was not correct to take a buy here because of this liquidity here, right? And this imbalance.
I'd say no, because look where we are, right? Like this is Asia low, and then you have a ton of liquidity sitting here, right? And you know what? I actually can't remember, was this Tuesday? I actually might have included a loss here. So I'll show you guys, because I think I did try to take, I didn't take it in like the live market, but I included it in my markups if you look in Discord. So I mean, yeah, I think I was thinking the same thing as you. Like, it's obviously a 15-minute zone, broke structure, swept liquidity, right? But then there is also liquidity sitting below it. And this is one of those weird cases where, like, we would have just hedged, right? That would have been probably the best play. You have a ton of, like, momentum here. Now, ideally, like, we'll dig into it, right? Ideally, a lot of the time, this lower time frame entry model will sort of, like, help you filter out trades, so you're not necessarily taking, like, kind of, like, low probability ones. But really, it is your job at the end of the day to pick good quality POIs, right? So to me, this is like an okay quality POI. It's very similar to this one, right? Where it was kind of like decisional, whatever, you take an L on it or you go break even, right? I think this one didn't even make 4 hours, so it's whatever, you take an L on it, right? But what's the risk? Again, you have liquidity sitting here, right? It's good that we're buying in discount at least, so that's good, right? And it's good that there's a ton of intent here, so obviously this might have faked out a lot of you guys. Who tried to trade off of this on Tuesday? You could say it in the chat, it's fine.
I did.
Not me.
Did you? Yeah. I stayed out of it because like I didn't trade London, so it's not on the
Can you
same.
considering that this leg we have on the premium zone and don't take a buy here?
Yeah. Yeah,
it's correct.
Again, it's not the worst thing, but if you look at even if you look at premium discount even of this leg, right? It's obviously pretty premium too, right? Whereas look what's sitting here, right? This is in discount. Mm-hmm. This gets tapped into later, right? We'll break down this trade too, because it's obviously a really good one, right? So it's just a matter of being aware of where the mid time frame liquidity is.
Yeah, that's exactly what I didn't do.
Yeah, on AU you're saying. Yeah, and AU and EU correlate, so
it makes sense. Very similar to this. For some reason, I thought it was AU.
Yeah, well, yeah, they're very similar to each other, right?
But yeah, we all make mistakes.
Yeah, 100%. And you know what? Like we were saying before, obviously there's a chance this could have held, right? Otherwise, you wouldn't have put a trade on. Why would you put on a trade to like lose money? You wouldn't, right? But and look, you had liquidity. Like this actually, fit like kind of, it hit a lot of the boxes for what would be a pretty good POI. I guess the only other bad thing about it is, it's Asia low, so it's like you can kind of maybe expect that it might get taken out. Same with this Asia high, right? It's like not the best POI, but obviously there's a trade short here too, which I'll show you guys. So let's dig into them. And again, we'll make it interactive, right? I want you guys to try and enter this loss too and tell me if you would have stayed out or if you would have taken it or what. Like, let's make it realistic, right? We don't catch every trade, that's fine, right? And we're gonna take L's, so just accept that, right? So on the lower time frame, okay, look, we tap into this 1 minute, right? If I refine it a little bit, we got these wicks, whatever. It looks like we actually tap into like a little doji here, so we can mark that out. I'll just leave it as these wicks, it's fine. And then
we didn't break anything.
We have this extreme wick that never gets tapped into, that's fine, right? Where are we in session? Frankfurt's here. We're at Frankfurt now, and we're quickly approaching London Open, which is 3 a.m., right? Eastern Standard. 8 a.m. British Summer Time, right? Alright, we tap into this. Now let's look for our change of character. What would you guys consider a change of character? You might have actually stayed out of this, even though it was like, there was a move. Okay, you'd wait for this low to break, right? That's a little aggressive, that's fine, but like, what's your other option is this low, right? Which is like the whole move we're trying to play, so. Oh, sorry. Sorry, Jason, you want to mark that out again? You're welcome to. Yeah, okay, good. Yeah, one thing I want to mention about chalks, right? Because I've done this too, right? And I think it's important that like we're all consistent about how we mark it up. If I quickly clear everybody's drawings here, sometimes what I'll see is people mark out internal chalks, if that makes sense. So literally like kind of like this, like, oh, okay, I'll consider like this, right? I don't know if that's the best example. I don't know if you guys know what I'm talking about, where it's like you kind of have like this, but it's like you never took the previous high. This is not valid as a chalk. Like, don't do that, right? But this at least is, right? It is aggressive, right? But look, we close above, we don't quite close below, but we wick it pretty good. That's not bad, right? And the fact that we tapped into this refined zone up here is pretty nice, right? So again, what can we do here? Like, do you guys want to try and enter this? I'm gonna rewind one candle here, or I'll even leave it at this, right?
Maybe.
Yeah, there's two ways we can enter it, right? I'd probably go for the wick, right? If that doesn't tag me in, that's fine. But where's my liquidity? Do you guys see it? Where's the liquidity that got swept? And where's the like? Here's the thing. I'll give you guys a little hint here. Like, we could be premature too, right? We can wait. If you guys want to wait, we'll wait. But this is just a really compressed version of like the lower time frame model, right? And yeah, this could get used as liquidity too, right? This wick. So do you guys want to enter or no? You can stay out and enter later, right? Yeah? Okay, we'll enter. Good, good, good. It seems like everybody wants to enter on this one. Good. So let's see. Did we get tapped in? We get tapped in. Nice.
Bam.
Tapped in a few times. Look at that, right? Okay, so here's the thing that's convoluted about this. Even when I was looking at this price action, in hindsight, like for the markups and stuff, I'll explain to you guys what I was thinking. Let me clear these drawings again. I mean, Eli, what do you think? Like, this is pretty like tough to read, right? You have like a wick here. You kind of get like a reaction. If I look at the 15-second, okay, of course there's liquidity here as I expected, right? So this was our flip, right? But I'm not entering off the flip. I'm using the flip as liquidity, right? So pretty much this push up, right? It's very subtle, right? If I go to the 1 minute, then it just wicks again, right? So what we could do instead is wait, right? Say you didn't enter that. What we can do is wait for like a little bit more of a clear like chalk like this, right? Take the high, take the low, and then violate an area of supply. In this case, this one, right? And then again, does our flip sweep liquidity? Well, let's find out. I don't know if it does. 15-second. Let's check. I'd say so. It's pretty subtle, but like, you guys see this? Tap in. Yeah, exactly. You swept that liquidity, right? And that's good enough for me, right? So again, go back to the 1 minute. We have a huge candle here. So this is a case where either you can try to take the whole candle or just take the 50% of it, right? So if we do the whole candle, I'll leave this order on because obviously we got tapped into it. Everybody was happy to enter that. That's fine. But again, I also want to show you guys, you don't have to be first to get in, right? You can literally leave an order here. I don't know if it's going to tap us. Let's see.
Did that one not hit?
No, no. I think spread would have maybe kept you out of it. Building more liquidity, but it's not over yet, right? Yeah, okay, so I think this one was really the only entry you could have taken. So that's fine, whatever. I like to be realistic with it. I know some of you guys might consider this like, okay, tapped in. What do you think? With spread, it's like, there's a chance that, yeah, you wouldn't have got tagged into that, so let's delete it.
Unless you were to put a buffer, but that's...
Unless you put a buffer, but like, for me, it's rare that I front run a trade because I always expect that it's going to come into the POI to mitigate it, right? If anything, I'm like doing the opposite of front running and doing this, right? So, look, this
Hey,
is
Roberto.
Pip. Hey, what's up?
Yeah, hi. I have two questions.
Sure.
One thing is how basically when you are covering the top with your stop loss,
Yeah.
how many pips do you basically 1 pip or 2 pip you cover the top, because you can either cover just via 0.1 pip also, or you can cover it to 0.5 pip also.
You could have, right?
So what do you prefer?
What do I prefer? So here's the thing. I was having this conversation with Dan today, and we were talking about it. It's better not to look at this as pips because, and I'll give you the example why and why I honestly got like screwed on this trade because I was doing that, right? I mean, I even gave this 2.2, right? Look, because we just came out of FOMC, you guys notice like how volatile price is? Look how large these candles are. It's a 3 pip candle, right? Look, for me, I market executed this. I'm like, okay, I'll give it 2.2. I like round numbers. It doesn't really matter, right? Well, I got swept out by a tick. And then this ran like 7R, right? Almost 7R. Let's see, what did it run to?
Yeah, I entered on this.
Here, right? 6.5.
Yeah.
Again, I think Dana caught this as well. So Dana, good job. Round of applause to you for like staying in. Yeah, look, if I had given it like 4 extra ticks, I would have stayed in and profited on this trade, right? Assuming that like, you know, I TP'd here and everything, right? Again, it's late day. Like this is an end of day push. I would have probably taken 5R on it, right? had I managed it that way, but I got taken out, right? That's fine, whatever. You take the next trade, same thing, take 5 on it. But to answer your question, yeah, I don't necessarily have like a set amount of pips. I don't like doing anything like less than 1.5, which is why personally I do that, right? Sometimes I'll do 1.6. It really depends on the volatility of price and how big your candles are, right? If it's a 3 pip candle, like put 3 pip, give it some spread, do 3.2. There's nothing wrong with that, right? Just make sure you can hit at least 5R on it, right? Especially if it's like a counter trend move and stuff. So, but yeah, for this one, that's why I put 1.5. But I personally, I don't like going less than 1.5. That's just me. I'd rather have that extra spread, right? Or that extra, because it happens sometimes, right? Sometimes, and especially with continuations, you'll have like stuff like this where price will come back, right? And if you just cover the high like this, sometimes what will happen is it'll do this and then it'll continue down. And had you covered it, you would have stayed in, right? And that's why like sometimes I like to enter market. I'll wait for it to come in, and then I'll be like, okay, I'm gonna enter, and then it gives me more room, right? Not only do I get a better fill, but I give myself more buffer, so price has room to sweep if it wants to sweep, right? Does that answer your question?
One more. Yeah, that's perfect. The second question is similar to this. Once I'm facing a bit of issues around this is once you have a market limit. Once the trade starts, it starts accumulating and hanging around the price, around the entry price. What's the psychology at that time? Do you want to should I close this trade as fast as I can, or
so before I ever enter the trade, I'm accepting the risk, right? That's important that you do that. Like even for this, like this obviously came back, took me out. It's fine. You're just paying the market to see what's gonna happen, right? I'm stealing that from Mark Douglas. Talks about this a lot in I think Trading in the Zone and his like YouTube series and stuff. It's like you're paying the market to find out what's gonna happen, and then potentially you're profiting off of it, right? Except that you're like losing that risk, what you were risking, right? If you can't do that and you're trading with fear, like it's gonna screw up your trading, because what's gonna happen is you're gonna either be really apprehensive about entering the next one, and the next one could be potentially a 10-hour trade, and you're just stuck with all your losses, right? And then like vice versa, if you're over trading and not following a model, not following a trading plan, jumping back and forth between different trading plans, like expect to take losses too, because you're not gonna be consistent, right? If I'm just trying to enter off of every flip here, like what do you think is going to happen, right? There's a chance you might be profitable here and there, but then you're going to take a huge string of losses potentially, right? Because you're just not following anything. And then when usually what's going to happen is, again, it's the same thing as like being too apprehensive. When the good trade does come, you might hesitate to take it because you just took 8 losses in a row, and then that next trade is potentially going to within that series of trades is going to like wipe out all the losses and then pull you into profit, right? So that on the psychological side is like it's a very good question that you ask it, and I mean you guys are welcome to ask questions like that. Eli, what do you think? It's the same thing, right? And I think you agree. You just
I have nothing to add.
Yeah, basically you're just paying to play, right? It's just like playing poker, right? You're not gonna go and play. I don't know if you guys know like Texas Hold'em, whatever like game. It could be blackjack even, right? You're not gonna go in and just like risk $1, right? Or whatever, right? You're going to risk whatever set amount the same way you would probably approach trading, and you're going to accept that like if you lose it, you lose it, right? You're playing the game. You're paying to play, right? And if you don't have anything to risk either, it's like you're not going to potentially gain anything on it. So I just try to view it as, okay, I accept the risk. If it takes me out, I wasn't wrong. If it works, I wasn't right either, right? You're never wrong or right.
That's right.
It's the market is moving around, right? You don't control it. There's no certainty in it, right? So okay, so for this one, I want to quickly show you guys the hedge, and we have like 30 minutes left. So if you guys want to do like software FX maybe after this. Do I play poker? Yeah, I do, like casually with my friends. It's pretty funny. I'm actually, I'll be honest, I bully people out of their chips a lot. That's kind of my thing. But it's a little bit of a different game because it's like, there's bluffing involved and stuff, right? But
it's a different dynamic.
What is my Instagram name? Roberto.forex, I think. I can't remember. I don't really use it much. But okay, look. So we're in another 15-minute zone, right? This one here, which again I think this gets blown through. But again, I would have used it as a hedge anyways, right? So let's quickly run through it and see, right? Would you guys have taken this? Maybe, right? I'll show you the the setup is valid in terms of like the lower time frame, right? But maybe not the best quality zone to take it off of, right? So I'll quickly show you guys. I'm gonna include this L in here. I want you guys to see. You can take these L's. You should welcome them. It's fine. So do you guys see why you would take this? Right? Actually, I don't know if this is the right area to enter off of. Let me see. I mean, what do you guys think? Would you enter this? Does this follow the model? What do you think? Give it like 2.6 pips. Oh, you got 2 buy trades here? There you go.
Can you see in 15 minutes, please?
Yeah. Someone's asking, why does the team not trade gold? We trade gold. Some of us do. Dan does. I know that. Seafood Dan. So there's 15 minutes. You can see it blows through it, but right? All of this was liquidity. Again, I understand the logic of why some of you may have tried to long off of this, but again, in my hindsight markup, I'm gonna leave it in because it's good, right? Somebody tried to take 2 buys off of this, eh? So there you go. Now the 15 minutes been like pretty violated, right? So if I had taken 1 L,
hey bro, quick question, man. Sorry about that.
Yeah, what's up? Welcome to ask questions.
For this change of character right here, isn't this like part of this whole leg right here?
Sorry.
Or you would still consider it like?
No, I would consider this the change of character because it's this last leg before we push up, right? And then we slice.
Yeah, I see.
Because part of the reason this also like wasn't the best is because we didn't have any like fight here.
No flip, really.
Yeah, there's no real flip, right? And then we kept on respecting this, so maybe this wasn't the most valid trade, but again, like, errors happen. We'll leave it in, it's fine, right? Oh, okay, I remember now. So here's the other thing I realized about this when I was marking it up, is depending on how you were looking at it, knowing that we're tapping off of this, if you didn't enter this, there actually is a proper scale in. So I'm going to show you guys really quick where it is. I think it's pretty obvious, right? And it's kind of weird because it's kind of like intersecting with what would be like the long hedge, right? So if anything, it would make sense to take it. I think that's kind of the logic I had behind it when I was doing the hindsight markups. Usually the way that I do it is I'll backtest through it, right? I'll see what POIs get hit. I'll backtest all of it and see like how accurate I am. And by the end of it, I'll just, correct it and see like what would I have taken, what would I have not. And that's why I'm including the losses too, right? So I kind of include some of the mistakes too, here and there. At what point do I stop looking for scalings on the 1 minute? Good question. So as soon as the way that I kind of see it, I'll draw a diagram here, right? Here's our 15-minute POI. It's the same as the one that I posted in Phantom Resources today. We tap into it, we get our 1 minute chalk, right? Say we start chaining and we tap into a decisional, maybe we tap into the extreme, right? Start pushing down. For me, the minute we start breaking like these major 1 minute lows, I'm probably gonna stop looking at it, with the exception of if this is like a really nice 15-minute zone, right? So obviously this is up liquidity, right? This would be a nice 15-minute zone we can look at. What I would do is I'd probably stop looking for any trades kind of below this point, right? It's because it's kind of pushing it. So that would be this point here, and even earlier, to be honest, right? But I'd still be okay with taking trades here, right, at this point, which would be this one, right? And if price comes and pushes back into this, again, all I would do is wait for the chalk again, and then just repeat the lower time frame entry model process all over again and try to enter, right? Because that happens sometimes. Price will just basically build more internal range liquidity, like so, Dorito liquidity, whatever you want to call it, and then come retest.
Basically, once it reaches the low or the high,
yeah,
the higher time frame.
Yeah.
I have one question about your backtest or you choose entries. When you have to choose one, how much backtest you have to do to know if that entry have results on the long term?
How many backtests, like how many times do I need to backtest like the entry model?
Oh, yeah. Exactly.
It's a good question. So you can do it 2 ways. Either you can do like a small, you can do either a small like sample size like of 30 trades. For me, like ideally, if you're forward testing or back testing it, or even if you're doing like hindsight markups like we're doing here, do like 100 of them if you can. Whatever, it'll take you some time to do it, but then you're gonna get like a real sample size to see, okay, it's basically gonna help you build confidence, right? You'll see, like, even though we took a bunch of these losses, and again, I'm including the losses for a reason because I want to show you guys, like, to be realistic about it, right? Even though we've taken all these losses, and even if we don't manage these like perfectly, you're gonna be profitable using, like, you know, this entry model, right? And it's very similar to what, yeah, it's very similar to, like, I mean, we all pretty much trade, I would say, within 80% of each other, or like we're maybe 20% different. So I would say, like, me, Brian, Brad Spicer, even Eli, we all trade very similar things. Dan, Albie, Sam kind of they trade very similar, except there's some small, like, tweaks to it. Like, Alb is a little bit more conservative, I'd say, but he trades flips, right? Dan, same thing, he's very similar. And then you have Sam, who basically trades what I'm showing you guys on the 1 minute here, but on the seconds, right? And then even Brad and Phantom, we all trade the same thing, essentially, right? We're just looking for sweeps of liquidity a lot of the time, and chains of supply and demand, which is what we used to call, like, bearish and bullish order flow. It's the same thing, right? But anyways, so this one, look, this would have been the scale-in that I think is actually kind of higher probability. The thing is with this, obviously, because we're, like, kind of lower down, you can either manage it just as 5R, and I'll just show you guys, right? Between this and, like, the other losses we took, we'd probably be running at, just for the week, I think, like, 12R or something. You guys can correct me if I'm wrong. I think we took 2 losses and, like, maybe, oh, sorry, maybe we'd be running 8R or more. I can't remember. Wasn't there, like, a good trade in here? We had 5R here. We had 5R here. Oh, yeah, okay, so we'd be running about 13R. We took, you know, whatever, 2-3 losses. Maybe we're 12R. We took 3 5R trades, right? And then, listen, if we try to manage it this way and go to the next swing low, 15-minute, even just the high of it, look, we can bank like 9.5R on this, right? So, like, we're already making almost what we need for the month, right? Remember, if our target is 10% at 0.5% risk per trade, we only need 20R. We're literally, like, over halfway, right? So look, here's our hedge. We take our L, right? Price seriously dumps through, like, our TP, right? Even if we took, you know, our BE at 4R, right? Maybe you would, like, net 7-8R out of this. Like, I think we're almost hitting 20R net in total, right? So, I mean, you guys do the math. I'll quickly calculate it, right? If we're doing, like, even with the 5R, right? Say we're doing those 5R trades and we're taking 20% off of 4R to cover risk, right? Say, okay, we net 4R out of it, right? So we took 2 of those trades, plus, say we net maybe like 7-8R out of this. So 4, right? 4 plus 4, those are the 2 winning trades, plus, we'll say 7, 15, right? Minus 3 losses, there you go, 12R. And what is 12R times 0.5%? What do you guys think? 6%, right? Pretty easy math. 6% on 100K FTMO, 6 grand. If we're gonna take home, 70% of it, I mean, you're taking home like almost 5 grand US in the matter of 2 days, right? But
I have a quick question.
Consistency, right? Yeah, sure. What's your question?
If you're talking about the R, but your stop loss, if you put your stop loss like 1.5 pips above where you would generally put it, then your R would be less, or no?
Like this?
You put your stop loss higher than that, right?
No, for this one, I would only cover the high, because then I am really
okay. Yeah, but you have to cover the spreads, right?
Yeah, but like your spread isn't, unless you're trading on like a non ECN. Yeah, like your spread's not 5 ticks, right?
Yeah, what is it? 0.
Okay. Okay.
Like,
yeah.
I'll tell you, for FTMO, it ranges from 0 to 0.3 at most. You're not gonna get taken out.
Okay. Yeah.
It's not an issue. But yeah, good question though. Good question. Hey, look, price ranges around. Okay, this is the trade that I think Brad Spicer caught, which is a really nice one. I don't know who else. I know a lot of you guys caught this long, right? We'll run through it really quick, because again, it's subtle. This is a subtle one, right? Look, we have our flip. Let's start with this, right? Obviously, we're tapping into a 15-minute zone. In case you guys can't see it, that's what this gray box is, right? Flip zone, right? Let's say this doji. Yeah, and there's our chalk. Whoever marked out in blue, like, good job. Did a great job. That's good. Okay, so Yeah, why am I looking at that zone though? If we don't have
I have
liquidity
one
yet?
question about this entry.
Sure, what's the question?
Why didn't choose this one?
Both can work, right? Definitely, like when I back tested this, because again, I didn't trade London this day. This is like 4 in the morning for me.
Because I lost this move, this move because of this.
Like 100%, you should potentially leave like a limit order here if you feel like comfortable doing it, or you can just pick one, right? You don't have to do both. Like you have your V-shaped recovery, everything, right? Price could come back into here. We don't know, right? So, of course, like I said, this could get used as liquidity, right? Like 100%. If you missed it and you left a limit on this, like I don't think you did anything wrong, honestly. Not at all. I don't know if Brad Spicer left a limit on this. I know he caught it here. He's quick about it, right? Why? I'm gonna tell you why. Look, liquidity, right? He built some here, right? Now, what's maybe a little bit like subtle about this is the fact that this is also a flip, and this is like another like struggle here between buyers and sellers, right? You basically have sellers defending this zone right here on the 1 minute, right? Then you have buyers that are pushing, they have their little interaction. Sellers push it down as much as this wick, right? Show you guys here. See? Right here, there's our reaction. Again, this is the only thing I'm using 15-second for, is just to assess, did we build liquidity here with our flip, right? We did, right? Created liquidity, and then that's what this wick is. Oh shit, sorry. And then if I skip ahead, there you go, you get tapped in and price just shoots off real quick. That's a fantastic trade if you caught that. But again, you leave a limit down here, nothing wrong with it. I think that's a great place to leave an order. And if you miss it, like, don't sweat it, it's whatever. Target, look, I keep on giving you guys conservative targets, right? Because like even if we don't pay attention to like 15-minute structure and stuff, like, look, like I'm gonna tally at the end of this what we're making net are, right? And it's only like, this is still Tuesday. So we'll just target this for 7.6 R, whatever, right? Again, assuming that we did our, whatever, 20% at 4R. Say we maybe net, like I'm just taking 1 or 2 R off of it, right? To account for that. It might be even less. Say we only net maybe, I don't know, what do you guys say? 6 R out of this, right? We'll take 1.5 R off. We pull up the calculator again. We were at 12, right? There you go, we're at 18. We've almost hit our like monthly thing. Oops. Sorry, I didn't mean to do that. Let me pull up everything again. Am I still in the Zoom call? Yeah, right? Like everything disappeared on me because I shook my my monitor there. That one. Okay, we got the chat here. Good. Okay. So yeah, what are we running? 18R, right? That's already like literally almost 10%, right? Okay, I'm talking net too. That's accounting for losses. Remember, I added the losses in there, right? Even if you miss this, there's how many more trades during the week, right? The opportunities there on one pair, even in one session. Look, I was trading only New York all this week, and like there's plenty of opportunities. That's what I'm saying. Okay, Rob, I'm kind of confused between falling mitigations and SD flips. When to use what? So AJ, what I'm gonna suggest is rewatch this video because I keep on going through the lower time frame model over and over, right? It's the same thing. I'm not trading just flips. I wait for lower time frame liquidity, and it's the same thing that like if you need models for it, look at the Phantom Resources that Sam posted. What he posted, again, he trades that on the 15-second, but I was looking at it and it's like the exact same thing I trade on the 1 minute. Literally the exact same. There's no difference. He's always waiting for liquidity, sweeps, and then taps into these flip zones, So I know maybe it's a little daunting at first, like there's nothing wrong with that. Everybody's got to learn at their own pace. It took me a long time to learn it too, right? I won't even deny that. I've struggled as much as you guys have, right? But it gets easier the more you do these like hindsight markups. So like I suggest you go through this video again, maybe even last week's video, because I actually explained how to like run through Notion and everything. And yeah, do some practice of just EU or whatever the pair of your choice that you like trading, right? And You'll get faster and faster at it, mark up your higher time frame, whatever. The exact same process I just did here, right? Do your structure, and then start looking for the lower time frame models that are in Phantom resources. You can use SAMs, because again, they are the same thing, right? I actually almost like his better, because they're a little more simple than like the ones that I have drawn out. Mine are pretty like complicated. But for me, I just look for the same thing over and over. I'm looking for chalk, flip. Like we'll look for it again here, right? Look, 8 a.m. New York Open, right? Where's our chalk? Let's do this one together, AJ. You tell me where you see the chalk, and let's run through what you think is the best place to enter on this trade. And obviously it's one like permutation of price action, but you know, you practice this like whatever 100 times across 100 different trades, you're gonna get better at it, right? And your brain will start to notice it in live session, so you can actually execute, right? So for me, I'd be waiting for this chalk. Again, I'm approaching it. I know that it obviously sweeps this high next, right? But this is how I would follow it, right? I see price taps into our 15-minute zone. What is the 15-minute zone? Oh, why is my numpad not working? 15-minute zone is here, right? It's that zone right here. That's a drop-based drop, and I think this is also a flip if we really dig into it. But whatever, it's fine. Go back on the limit. Again, we're like perfect time for New York session. Like I love like 8, 9 a.m. Like it's really good. There's usually like a lot of volatility. 9 a.m. is usually better, but whatever. So we break the high. Okay, we sweep the high a little bit. So it's okay. If you don't feel comfortable entering it, don't, right? Because we took the high. We only like really wicked it. We barely closed above. So I'm going to still consider it valid. It's fine. All it did was sweep literally the high of this POI, right? Imagine there's liquidity here, right? Stop losses sitting above here, just like that. So all it did was grab some liquidity, not a big deal. This is a thing that GU does all the time, right? Just sweeps stuff and then goes, right? You get this huge sell-off, where we basically slice through all of this. All these areas of demand, right? It doesn't even make a fight, right? So for me, yeah, and then we get our change of character at this low, right? So AJ, for me, what's the next thing I'm looking at, right? We didn't sweep any liquidity. So I'm gonna wait for liquidity, number one, right? To build up, right? And if we start chaining or whatever and breaking lows again, then I'd be happy to take that too, right? There we go. Okay, we're starting to build a little bit of liquidity. What's my first instinct is to try and short off of the extreme, right? And you can even include like this candle if you feel like it's not gonna tap into it, right? This is 1.6 pips. I'll give it a couple. We'll do 1.8. So I'll tell you right now, price doesn't tap into this extreme, but price does kind of range around here, right? Eventually breaks below this low, right? Violates what essentially is, yeah, this here. So this one's pretty misleading, I'll be honest, right? Like you have liquidity that's sitting here. That's definitely like throw me off, right? But then look, we break this and look, we actually get an interaction between buyers and sellers on this one. Do you guys see that? We'll say it's this wick, right? And we'll look at it on the 15-second too to see, right? This is just liquidity here to me, right? So two places we can look to enter, either this extreme or this over here, right? And in this case, I'm gonna leave my limit at the decisional. I know there's liquidity here, okay? It makes it a little bit inherently like more risky. It's okay with me. I'm good with that. Obviously there's, like, I guess here's the question I would ask myself, right? To run you guys through like the thought process. Why would I leave a limit order here if there's liquidity sitting here? Look at how impulsive this candle is. Look at how impulsive this move down is and this break, right? There's like no fight. I mean, there is a fight, right? But in this case, look, no fight. There's just so much momentum, right? Price doesn't have to return to the origin. There's no like rule. There's no hard and fast rule that says, okay, price has to return to the origin every time. It can return to this decisional despite the fact that there's liquidity sitting above, right? So set my limit there. There you go, it taps me in. You could have even done this, honestly. I'm gonna give you guys like the worst case example. You could do 3 pip stop loss, cover the high, right? Taps you in. Where's my liquidity? We also build more here. How do we build liquidity? As a result of tapping into, yeah, demand. Exactly. So I just keep on looking at it as that. And yeah, of course we build, look, trendline liquidity on the downside to fuel the move down, right? So it's not the easiest thing to spot, but I'm more so trying to pay attention to basically who's in control. It's the same thing Blackwatch always says, right? Who's in control in this case, right? Obviously it's supply. We tapped into supply. We violated the shit out of demand. Every single demand just getting blown through, right? This last one's holding, just builds liquidity, right? Taps us in, 3 pip stop loss, right? I think you even get a re-entry here if you wanted to be like, yeah, super crazy about it and continue to like chain it. I think this would be totally valid, right? So say you even entered here, right? I keep on trying to like give you the worst case scenario just to show you how good it is, even with like the worst case, right?
Not entry on the
Yeah, this one doesn't tap.
the doji or
yeah, I mean like, yeah. For me, the reason I'm doing this is because it's the last buy to sell, right? You could do the inside bar too. Nothing wrong with that. But that's fine. Like this, I'll tell you right now, this is valid, but whatever, it doesn't tap you in. Not a big deal. You would have been tapped in on this one, right? And again, I'm going to give this a 3 pip stop loss to show you that you can still bank really hard on a huge stop like this, right? It's all relative anyways, right? Look, even if we just target like, I don't know, let's target like this low over here, right? We'll say for like 7R or whatever. First of all, let's see if we get break even at 4R, which would be right here. Let's say we almost do. We build more, like we keep building liquidity to the downside to fuel the move, right? Okay, so not only are we break even, because we would have taken 20% off at 4R, right? But even if we target like this, where our limit order would have been on the other one, maybe we, for whatever reason, expect that like this is gonna hold, right? I'll delete the order, but I'll leave this on, right? Because that's gonna be our target. And I'm gonna target the top of it too, just to make it like, I'm just trying to show you again, the worst case scenario. You're not even really botching the trade because it's just like, you're hitting everything anyways, right? Look, pull 6.5R out of it, say you net like, I don't know, 5.5, right? Look, we've already hit our month goal, or our monthly goal of 20R. Be done for the month if you want to, right? Keep trading in
I have one
somewhere.
question.
Yeah, what's up?
About this level over here.
Which
Why
one?
didn't
This
it
one?
hold here?
Oh, this level. Okay, so that's a good question. All of these levels here are just internal range liquidity, right? Again, we know just from looking at this, number one, we tap into an area of supply. We start violating demand. So who do you think is in control? Obviously sellers are in control, right? We keep selling off. This is all just liquidity, right? Internal range liquidity. That's why I'd draw this diamond, right?
The famous Dorlico.
Yeah. Here, I'll explain it this way too, because I think it helps to visualize it, right? Look, I have liquidity here. What's sitting under here? What do you think? People who are longing, where we caught our longs, right? Say you're one of these types of traders that maybe caught a long here. Maybe you just have like a limit order straight set on a 15-minute like this. There are people who trade like this, right? They leave their order like that, right? And then they see, okay, oh great, look, I'm 1R now. Look, we're starting to break these like 1-minute substructure highs, whatever, or 5-minute, whatever you want to call it. Like, oh look, I'm up 3R, right? Let's secure some profit, right? So what am I gonna do as that type of trader, right?
Break even.
We're gonna do a, oh sorry, that's the wrong tool. Let me do stop loss.
Yeah.
Look, these are stop losses, right? I'm gonna make it like really explicit for you, so you guys understand like what I'm even thinking here. Look, stop loss. Right, I'm gonna trail my stop loss is basically what I'm saying. So look, this trader is now locked in 0.62R, whatever. Maybe they're managing multi-millions and it's like, we're talking about like 100 grand or whatever in profit. Okay, 1.39R, right? They're locking all that profit in, right? So all this is just trailed stop losses. You can either look at it like that. That's the most simple way to look at it. Obviously, there's also people who leave like sell stops, right? People who are trying to like catch the breakout, right? So if I'm a breakout trader and I have a sell stop order sitting here, right, at these lows and my stop loss up here, how do these get triggered, right? It's the same way a limit gets triggered, just opposite essentially. So maybe it's not the same way, but I tap into this, I'm now in the trade, that's my stop loss, right? So this adds fuel to the fire to push price down more, right? So it's a combination of buyers' stop losses or trailed stops, and it even includes honestly people who would have entered here too, right? Even like, you know, other traders, maybe they trade like the same concepts. If you entered here and your stop loss is down here, again, same thing, there's liquidity sitting down here too, right? So any of these areas have liquidity, it's internal range liquidity, it's gonna fuel this move down, right? Because every time we tap into it, right, for somebody to cover their stop loss here, right, in a bearish market, they basically have to cover like the opposite side of like their trade's action, right? Meaning it's going to push price down further, right? So remember, it's just an interaction between buyers and sellers. It's all this is, right? Supply and demand, same thing. That's what internal range liquidity is, just all stop losses. So with this one, look, yeah, so we made what? I'm going to say we made 5.5R after like commissions and whatever else, right? And this was like a huge stop loss, right? Ideally, you could have done whatever, the 50% of it, covered the high like this, 2 pips, maybe targeted this instead, and you could have changed it to 12R, right? I'm giving you the worst case scenario. You pulled 6.5 gross and then 5.5 net. And if I pull up the calculator again, remember we were kind of sitting at 18R, right? Plus 5.5, there you go, 23.5R, right? One FTMO account, 10 grand, right? You keep 0.7. That's your take home, right? So you could be done trading for the month. You've made $8,225 US net before taxes. Obviously, you got to pay taxes on it, right? But there you go, right? And it's only, what is this? It's still Tuesday. Like we've gone through 2 days of price action, right? Obviously, I'm taking a lot of trades here, but they're all valid, right? And I'm including the losses because again, I want to make it like realistic for you guys, right? Expect losses. It's fine. There's nothing wrong with it. There we go. We end up sweeping even this low too, right? Same thing. This was external range liquidity in this case. If we're looking at it on the 1 minute, right? Stop losses sitting here. And it's usually a range of stop losses too, right? Kind of think of it like this. Stop loss, stop loss, stop loss. Just all liquidity sitting below. That's all liquidity is, right? So yeah, let's look. Somebody's saying let's try it along this now. And yeah, you're right. I mean, we're kind of late in the day, but we're actually not that late. We're still at like 11. So we could do our end of day push here essentially, right? Let's do this as our last trade and we'll wrap it up because me and Eli got stuff to do today. Unfortunately, we didn't get to do software FX. Let's do it maybe next time we run it. But I mean, yeah, like what did you guys think of the session so far while I run through this last one? You guys feel like you got anything out of it? Like same thing as last time? Good? What do you think? Give me some feedback.
Yeah.
Weekly. We should
Absolutely
do this weekly.
great, mate.
You guys want to do it weekly?
Weekly, yeah. Once a week will be good.
Could definitely potentially do that.
Absolutely great.
First time, yeah.
It's your first time? No problem.
Yeah, first time.
Hope you enjoyed it, man.
So, okay, I enjoyed it a lot, yeah.
Perfect.
I made a lot of questions, so.
No, it's okay. It's good that you asked, because listen, like if you're not gonna ask it, somebody else is, and I'm sure anybody else who's new has the same questions. So it's like, it's the whole reason we do these videos, right? So we did that. We took the low, took the high, right? Where do you guys want to enter on this one? Tell me. We're gonna do the extreme. I think the extreme would be valid on this, but it's pretty late in the day, right? Yeah, you could do this. I would probably do the range, honestly. If we're gonna mark this. This could get used as liquidity, right? Again, liquidity here, but this one's weird because it's not really like fighting with anything. It doesn't even tap this.
When we have two candles with a lot of imbalance, which one you prefer?
Oh, usually I'll do like the range. And it's not super clear. Like I'll try to avoid doing like engulf candles like this. I'd rather just do this whole range here, right? And by range, I mean the pullback, right? If you want to see what I mean, like let me see if I can, yeah. See how this is a range?
Yeah.
It's a pullback on the 1 minute, but like it's pretty clear. Look, there's buy to sell, sell to buy. Price action within this. Literally like a lot of transactions going
Rob, when you do a range, when you have a range, do you trade on the EQ of that range?
Nope, not necessarily. Depends. If it's really big, sure, but otherwise I'll just take like the tip of it. Or you know what? That's not completely true, because again, sometimes what I'll do is I'll set an alert, like usually where the liquidity is. So I'll set an alert like this, literally. I'll let it tap into it, ping my alert, and then I'm like ready. I'm ready to like, I'll have my magic keys open or whatever your trade manager is, it doesn't matter. I'll have market order ready and I'll have my stop loss just sitting here, and I'm letting price come down into it so I can try and like get a better fill, a better price. So say we see price, I'll show you guys what I mean by market order. I'll tell you when I would enter. I don't know if it even taps into that, to be honest, so let's see. Might not. Yeah, so this one kind of runs. I think I don't think there's a trade on this one, if I recall correctly. I definitely look at this. Yeah, this is too late in the day now for me. Honestly, I wouldn't be at the chart. Like, this is almost like 2 p.m. my time. But okay, assume that this wasn't. What I would probably do is, okay, I see price kind of like coming in and doing like this, right? Okay, price is whatever playing. I would market execute this. My stop loss would be here, like set, right? So I'm basically waiting for like a better entry, and then whatever I execute. Okay, there you go. Let's see if this runs 5R actually. I don't remember. We take this high. Okay, we do. There you go. There's another 5R. You actually called that one. Pretty nice. I didn't catch this though in the live market. I'll be transparent with you guys. Because again, I wasn't at the computer at this time. It's too late. I'm doing other stuff. So
that's what I don't understand. Why didn't it work on the board?
Why did I? Sorry, what did I what?
Didn't work on this one over here.
So this one, again, you could have, because look, there was a ton of liquidity here that would have maybe faked you out. But again, why do I? It's a good question. Why do I always like try to avoid these higher ones? Because it's a worse price, right? Like, I'm literally chopping all this potential, profitability out of my trade. And like, of course, like there's a chance it's gonna get used as liquidity. I'm always thinking about that, right? Where's the liquidity? I don't want to be liquidity. I want to get tapped into my trade as a result of a sweep of liquidity, right?
So in 15 minutes, maybe it's in the equilibrium.
Let's see. Yeah, we definitely went past the equilibrium of the 15 minute, but that to me isn't so important as much as like if we're tapping into like a refined zone. So I'll quickly show you that. Let's actually investigate that, and then we'll wrap up the call for the day. So in terms of refined zones, Sam loves doing this. So shout out to Sam, because he kind of like, I wouldn't say he championed it. We've tried doing this in the past. Like, this is even before, like, this is like even a year ago. I feel like we were doing this too, and I would be like, Sam, it's too much for me to do. Like, it's just like too much work, man. Especially when it's a 4-hour zone like 3 months ago, and it's like you can't even go on the 1 minute. I'm just like too lazy to try and figure out what it is, right? But look, there's these two zones obviously we can look at, right? Do you guys get why I'm marking these out? Price doesn't have to tap into the extreme. It's the same thing as us trying to enter in a retest of a POI, right? So
The decisional and the extreme, right?
Yeah, exactly. And there could even be multiple decisionals, right? But I marked these 1 minutes out. Let's see if... let me go back to the 15 for a sec. So which one did we tap into? We tapped into the extreme, right? The other one got used as liquidity. I'll show you what I mean. Right? We get our chalk, whatever. See, the thing is, if price chalked here, like, I'd be happy to try and like trade off of this too, right? Because I know we tapped into this. Obviously, we violated it a little bit here, and we originally tapped into it here. So this is pretty weak, right? You guys see how we tapped into it the first time? And then just use this liquidity, right? No big deal. And then it taps into like past the equilibrium of your 15 minute, but ultimately taps into this refined 1 minute too, right? And then here's our trade playing out, right? Again, I'll play it through for you guys, right? Build liquidity, in the decisional, tap into our trade, runs 5R. I would have, I'm telling you right now, if I had taken this trade, I would close it at 5R, because what's going to happen this late in session, New York session before spread hours, of course, price is ranging, right? So yeah, it took a while for it to tap in. Again, I wasn't even at the computer for this, so it's like I wouldn't
Hey, Rob.
have caught it. Hey, what's up, Michael?
So you were mentioning previously that price had already tapped into that 15-minute demand, and would that make it like less of a probable demand, you know, to re-enter that deeper down inside?
I would say so if it tapped deeper in it the first time. But because it just tapped into it the first time, again, us looking at it now, I mean, we can see very clearly, right? Tapped into one decisional zone, it built more liquidity, and then tapped into it again, right? That's all it was doing, right? And this honestly doesn't even run that much, right? I think this is more just a pullback on the 15 minute, right? We know this is weak. I think this is going to get blown through. I think it does. We can look at it. But yeah, I mean, it's a good question. Eli, how do you see it? Let's get like a couple opinions on this. Like, he's saying we tapped into the first one, obviously, right? So does it make it a less probable zone? Kinda. I mean, it weakens it for sure, but knowing that there's these two zones, right?
Yeah, I don't think I'd add too much to what you said. I mean,
Yeah.
there's more to be mitigated down there.
Yeah.
So that's obviously always in the back of our minds, but we just kind of depends what happens before it gets there, right? If it breaks structure to mitigate the rest of that, it's likely that it's just going to be a pullback, right? Because then it would have to break structure again to be bullish. Does that make sense?
I have one last question.
Yeah.
About the entry. So imagine if we are in London here, and the entry model here, and only tomorrow we'll reach that place. You will enter, or it's too late to enter on that.
So are you saying we have a POI marked out here and we tap into it in London? Is that what you mean?
Yeah, on the day after.
Yeah, like if this is in London session, we're tapping into this zone, I'm going to look for my entry model, 100%. 110% I'm going to look
No, imagine if it's day 9 here, and here is 10. You will enter at the same entry point, or it's too late?
I'll look for, I'll look for the lower time frame entry model again. I'm not going to just try and like enter off of a risk like this, right?
Okay.
What instead I'm going to do is I'm going to wait for price to come in. You can mark out your refined things, that's fine, just to see if it taps into it, right?
Okay.
Wait for my 1 minute chalk. Imagine this is the 1 minute chart, right?
Yeah.
Or we violate this, maybe there was liquidity here, and then whatever, I'll enter off the extreme on that one, right? There's my entry.
So it's not too late to enter on the entry model.
No, I always use the entry model. Always when we're retesting a 15-minute POI or a higher time frame POI. You don't need to
because you said on this example over here,
these ones?
It was too late. It was too late to enter.
Oh, okay, you're talking about a continuation.
I was thinking about.
Yeah.
Okay.
No, so for this one, okay, I mean you could view it as this, right? Like you have this 15-minute too, right? So I mean you could, but no, this is not too late because this is still within like the same session too. This is like a day later, right? If it's a day later, then obviously like it's had time to build all of this liquidity, right? Obviously this builds liquidity too, but at least we can interpret it as like the lower time frame. So I'd be okay with taking a continuation. I can tell you this too, even Blackwatch will take continuations like hours later. So like he would even do something like this, right? So depends on like what the pair is, what the session is, right? We don't always do that, but like if it chains and it's like if it's nice and it builds nice liquidity, right? And demand keeps chaining, right? Kind of like this. Then like yeah, we can keep pretty much chasing it. Just know like obviously there's a chance this is gonna get uses liquidity. You might get swept into the extreme again, right? Like it does in this case. That's actually what happens in this one, right? So even though we took this decisional, it expired pretty quickly. And then it looks like we tapped into something here, right?
Yeah.
Yeah, that's pretty much it, guys. Thank you, everybody who
Thank you.
We'll upload to the course within the next couple of days. But yeah.
Thank you, Rob.
Cheers, Rob.
Hey, Rob, I got one question real quick.
Go for it, Kurt. Last question, and we gotta go.
Hey, for your magic key,